Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
Nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday. Looks like we just got a transmission from Julie at HQ. Huge sales store-wide happening all month long.
Okay, great. Can you put that away now? It's distracting me from my driving.
One of these days, we need to install autopilot because I seriously think we're lost.
Didn't we get lost last year?
We did, I thought we would remember how to get there this time.
Let's just keep traveling to different galaxies till we recognize it.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, good morning, guys. Welcome back to the A1 Trading Show for the big day today. We've got meeting minutes today. We're going to be streaming for quite a number of hours today. And someone said, "Who is that guy?" That's not Nick. We have kind of graduated over time on YouTube, which is kind of fun. We like to consider ourselves an up and coming kind of network. The A1 Trading Show has people from all over the place taking it over. It's no longer just me on here because I can only do so much time on camera, but we have so many other qualified traders who come on here. And just for information, anytime you want to check the schedule, you can always go over to a1trading.com and click live stream schedule in the top right, or you can just put that link in your browser and check it yourself. But today you can see we've got a nice lineup. We've got myself here going for a little bit, and then Marco's taking over, and then I'm coming back on for a little bit. Then we got Forex James. Then we got James, who's going to do some giveaway stuff, which is fun. And then there's two James, by the way. Then I'm back for a little bit, and then Frank's coming on. So we got a roster here today, and it is a cool thing to have a bit of a collaborative trading show like this because you get thoughts and opinions from people who are not just myself. Echo chambers are a dangerous thing. Having differing opinions and different thought processes for trading is actually a very good thing. In fact, if you are somebody who's bullish on something and I'm bearish on it, some people will tune that out. They'll say, "Oh, I don't want to listen to Nick. He has a different opinion." But I think it's actually really healthy. If I am bullish on something, you're bearish, or I'm bearish, you're bullish, listen closer, right? If somebody disagrees with you, don't let that scare you. Don't be afraid of differing opinions. Lean into it. Ask why. Figure out maybe they have something that you've missed. Maybe you're right, and maybe you actually strengthen your argument for being a bull or a bear on something based on what the presenter has to say. So here's the lineup today. I mentioned it just a second ago. We have people coming on all day long. We've got meeting minutes this afternoon. We've got consumer confidence this morning. It's quite a lineup today. Consumer confidence is actually quite important to the state of this rally. You've got the stock market here. The NASDAQ is trying at the highs, S&P 500 much closer to its highs, and the Dow Jones made a new high yesterday. So stocks are doing quite well overall, given the certain environment that we've been in recently. Let's think about it for a second. Let's talk about what environment are we in, and why do I remain bullish in the market going into next year? Well, let's map this out because it's really important. If you want to ask, there's always this thing on social media, and you guys have to be aware of this. I'll say this: if you're a regular stream viewer, I say a lot of things, but let me say one thing about social media that is very important. We love that you watch the show. We love that you spend time watching the channel and learning things, hopefully, and hearing from our different people that come on the show. But there's one thing you have to be very careful about with social media. Social media and the way human brain stuff works, not that I'm a specialist, but in terms of trading stuff, the human brain gravitates towards looking for problems and danger in the financial markets. Have you ever noticed that if you go on Twitter and you find like trading stuff, a lot of it is very not like negative, but more like pessimistic about market outlook? Here's why. People find it more interesting to talk about a potential stock market crash than they consider finding something interesting like just the stock market continuing to go higher. Take that with you, because what's going to happen is you're going to start seeing there's sort of vulgar ways of calling it, but bear, you may know the phrase or not, but like bearish stuff all over the internet gets a lot of clicks. It gets a lot of attention to be pessimistic and bearish on financial markets. It's more exciting to listen to bears than it is to listen to bulls. But I'll tell you why I remain bullish given this environment that we're in right now. And this can change. I'm not a perma bull, but I'm certainly bullish right now. Here's why. Unemployment rate is still low on a relative historical basis. A 4.1% unemployment rate in the United States is still very strong. That's a good number. The long-term average, I think, is like 5.7. I saw someone crunch the numbers and it was like a 5.7% unemployment rate over the long term in the United States. So sitting at 4.1%, that's not bad. You know what else is not bad? GDP growth is still strong in the United States. We got 2.8% as of the latest figure, right? That's putting up some pretty good growth for an entire economy that's as big as the United States. To grow at that rate, around 3%, is still very strong, especially when you compare it to other places which are not seeing nearly that much growth. The US is still looking strong in terms of growth. Outlook for the economy is looking strong. Services PMI is higher than expected in the latest reports. The last three reported services PMIs, purchasing managers are feeling optimistic about the state of the economy and where it is going next. They know more than you and I do, right? I'll tell you what, if you're somebody who has a position of hiring and you can see the sales revenues and you can see the orders coming in for your business and you're making decisions, if we did that, if we surveyed thousands of people that are making decisions and can see the incoming orders and they tell us, hey, things look pretty good, then let's take their word for it until something changes. But right now, I look at services PMI, I say, okay, that's positive. I feel pretty good there. GDP growth, good. Unemployment rate, pretty good. Retail sales has been beating expectations. Here's the only issue that I see with all of it. The issue that I see with all of it is, number one, is inflation going to bottom out? If inflation starts to rise again, it does present a problem in which interest rates are not going to come down as much, or they may even need to go potentially higher. Those things break the story because higher interest rates slows the whole system and probably hurts a lot of the things that I just talked about. I'm not saying that that's what I think is going to happen because I don't know if that's going to happen. But right now, inflation, generally speaking, is trending lower. So I'm going to take it for what it's worth. It's trending lower. Things look good. I remain bullish. But if that changes, I will quickly adjust course, right? Right. So that is what we have to think about here is a lot of traders, if you're investing, I think you want to be more ahead of the curve, trying to forecast things longer term. But if you're a trader like me, I don't care to tell you where inflation is going to be in 3 years. I just want to know where it's at right now and what the current trends look like so that I can trade it. And if those current trends change, then great. My outlook, generally speaking, for markets is like the next 30 days. I'm not looking the next 365. I'm not looking the next, 3 years out. I am primarily looking on my trading side of things 30 days out. And right now I see inflation looking okay. I see the Fed wants to cut rates. They may not cut as many times next year, but we'll leave that for next year. Right now I know they're going to probably likely cut. Again, maybe in December, maybe not. That's become more of a hotly discussed topic. But I know that generally speaking, you have some optimism around Donald Trump administration. Regardless of how you feel about the guy, tax breaks for businesses is going to make the stock market get all jittery in the short term. That's what's been going on. It's cooled off a little bit. Stock market, actually, S&P is still doing great, but the NASDAQ had a bit of a pullback. Tech stocks have not done great, but we've seen a broad-based rally. That's another positive thing. Take a look at the RSP. This is an equal-weighted ETF of the S&P 500. Basically, think about instead of market cap weighted, which is what the SPX does. It takes, let's say you have $1,000. It puts a lot of that money into the biggest companies, puts majority of the money in the biggest companies. Well, the RSP says, let's take the top 500 companies and let's just equally disperse our $1,000 into each one of those companies. That's what the equal weighted S&P 500 does. Well, what am I referencing here? Why does this matter? Well, if the RSP is doing well, that means that the average company in the S&P 500 is doing well. If the S&P 500 is doing well, it does not necessarily mean that the average company is doing well because, again, it's very heavily weighted towards the biggest ones. So in the last few years, S&P has actually performed better than the equal-weighted RSP, S&P 500, because some of those big giants, NVIDIA, Microsoft, Google, Amazon, those ones have really seriously outperformed the rest. So anyways, I remain primarily bullish. And we got a reading here this morning on the bullish front for a couple interesting charts here. First of all, the S&P 500 producing a +6 reading here, which puts us into bull territory, right? +5 or greater on the Edge Finder is considered a bullish idea. It's considered a bullish lean. That means enough of our weighted calculations here, things like services PMIs, which we just discussed, and which were looking good, by the way. That strong outlook, seasonality looking good for the S&P 500 between now and the end of the year. That's being calculated into the score. This bullish rating, I like quite a bit. I remain bullish until I think 2025. You got to start to reconsider some things, not necessarily get bearish, but at least really reconsider some things. So as I look at the S&P 500, I can't buy it at the highs. But if we get something like this, if you get a breakout retest, continuations of this kind of concept, or a retest of this area, I am primarily bullish on this thing and still would like to add positions if I can find them with good risk management. I'm not saying leverage myself to the top and go all in. That's not what I'm saying at all. I'm saying calculated risk, small sizing, looking to add positions to my bullish existing positions in the stock market. Now, if we take a look at gold, gold has really taken a bit of a hammer here to the downside recently off of the prospects of negotiations going well in the Middle East. And of course, that decently strong economic outlook is not a positive thing for gold. In fact, it's one of the reasons why the dollar, that economic data, why the dollar has been so strong has been, we've had relatively strong U.S. economic data, keeping the dollar index elevated. that is a negative thing or a hurtful thing to the price of gold. It's not always a perfect correlation or inverse correlation between gold and the dollar, but generally speaking, a stronger dollar is a weaker gold. It's not perfect, and sometimes that correlation breaks down a little bit, but most of the time that is a fair kind of idea. This strong dollar here off of U.S. economic data being upbeat is really putting some pressure on gold, and that's why I'm not really super bullish on it right now. I've discussed that from a longer term perspective. If gold gives me a big flush to the downside, I may look to sell some cash secured puts on certain things, but where I'm currently at, no short-term trades on gold to the upside or to the downside. I don't have a bearish reading either. I have a neutral reading on gold, no trades. If you're someone who's looking at the technicals, couple levels to keep an eye on. You had some really big resistance come into this market. Two key spots that I see. This 2,700 level, right? 2,715, let's call it. And of course, the previous all-time high. I'm just really very much in the neutral camp for gold. If you start taking out either side of this, right? If you start breaking through those lows, you may get some short-term momentum continuing to the downside. And if you do see something escalate geopolitically, or we get a really bad jobs print, those are probably the things that would break us out on a technical basis to the upside on gold. So I know I sound like a broken record here, but pretty neutral on it right now. I don't have any conviction. I feel like there are better places for me to put my money to work than trading gold at this time. That's just my opinion. I could be dead wrong, could go straight up or straight down in the next 30 seconds. But generally speaking, right now, I just don't have a strong conviction on the price of gold at this time. So Bitcoin, however, is testing here. It's come back a little bit. I know a lot of people are watching Bitcoin right now, myself included. I have a pretty good sized position on Bitcoin, and it's coming pretty close to possibly taking me out of the trade. I've been long Bitcoin for a few weeks. It wasn't necessarily a Trump trade. I said that in a recent episode or a recent live stream. I want to take that back. Bitcoin was not I think Donald Trump's going to win the election, that's why I'm going long Bitcoin. That is absolutely not why I went long Bitcoin. And I said that in a stream, and I want to correct myself because that's not why I took a Bitcoin long position. I took a Bitcoin long position ahead of the elections because it didn't matter to me who won, Trump or Kamala Harris. That wasn't going to be the reason why I thought Bitcoin could rise. There's a couple reasons. Number one, I like the momentum to the upside, pure and simple. A lot of good momentum in this chart. But it was also, once that fear around the election was lifted, I think, this is my best guess, the market would have rallied on a Kamala Harris victory as well. Not because of, it's Kamala Harris or, it's Donald Trump. I think there has been some excitement about Donald Trump's less regulation and tax breaks and that sort of thing. However, I think Kamala Harris would have had a strong rally in risk assets as well, simply because people were scared about what could happen with the election. We saw this and we discussed this at length ahead of the election. This is what we saw. We saw people buying puts like crazy. People were terrified of what the markets would do in reaction to the election. I'm not always right, but in this particular event, I was very right. I basically said, I think this is an overreaction. I think people are getting way too scared. And I bought some risk on assets, and that ended up making November my best month of the year so far. So when I look at Bitcoin here, right, I was looking at this, and this was one of my risk on plays. I bought Bitcoin. I think if Kamala Harris won, I actually think Bitcoin would have also gone up. Maybe not as much because, of course, Donald Trump, apparently I saw something this morning that Donald Trump has like $4.6 million of Bitcoin or something. And I could be wrong on that. Somebody fact check me on it, but I did see that he has like a bunch of money in Bitcoin, which I think is kind of hilarious. That does he? I don't even know if he knows what Bitcoin is, but he certainly is a proponent of it with him and his best friend Elon Musk. Anyways, Bitcoin seems to be doing quite well overall. I, however, will only stick to the trade if we can hold support here. We've got a good start, but if this thing can't continue to bounce strongly from here, I think most of the trade has played out. I could be wrong about that. This thing could fly to 175,000 in a few weeks, But if we can't hold support here, I want to see a strong bounce quickly off of support here. And if we don't see that, then I'm going to take my opportunity to just take my profits. Maybe I miss some of the upside. That's okay. I've had a great run in Bitcoin. It's one of my best trades this year. In fact, I think it is my best trade this year. But I'm not going to sit around and hodl for, hold on for dear life. Like I'm not a crypto forever bull. I'm a trader. I saw this opportunity. I liked this opportunity. I liked the risk to reward, and it played out well. There's been other times, and actually, to be fair, I actually tried to go long Bitcoin one time before, lost a couple $1,000s, re-entered, and then made more of it back. So my point is, sometimes it takes me a couple tries to get the right entry, but Bitcoin definitely has been a rocket ship here recently. NASDAQ, S&P 500 making a push here this morning. Let's just drop down time frames for a second. Here's the 15-minute chart, and the NASDAQ's up 0.5%. S&P 500's up 0.2%. Bit of a risk-on rally here this morning. Dollar index flat on the day. Euro, pound, Kiwi dollar seeing a little bit of a sell-off. Dollar CAD here. Aussie dollar, dollar Swiss. Currency pairs looking a little boring here this morning. Dollar yen. 4-hour chart. Yeah, look how sleepy dollar yen looks right now. Anyways, TLT also down a little bit here this morning. I actually like TLT for a possible play. This is another one. Edgefinder put out this idea here this morning. US 10-year treasuries. COT. Can we look at COT for a second on bonds? Let's pull that up. Where am I going? I'm going COT, 10-year treasuries. This is definitely a bug. We got to fix this. 10-year treasuries are actually very short. I thought that looked weird. Let me write that down because that is not right. COT is giving an inverse signal right now on TLT. We need to fix that. So we are going to fix that right now. I'm going to write that to our support team as we speak. Use 10-year. Okay. Let me see. COT data. Yeah. See, they sold 10-year treasuries. Okay. Yep. Sorry. Just sent a message to the support team. Basically, this is just producing, and it just needs to be flipped. The signal here for COT data for US 10-year treasuries needs to be -2, not +2. Okay. Sorry about that. We're going to get that sorted out very quickly and should be fixed soon. With so many assets, what inevitably happens is you just have so many scores, so much data that sometimes you got to tweak it and fix it. So we'll have that sorted out as soon as possible. NQ looking beautiful. Yeah, NASDAQ's trying. I think we could be dead wrong, but seasonally, the month of November is really strong. And when we look specifically at, I don't have this data in front of me, but I know that Thanksgiving week, which is this week, right, is historically a really strong week for the stock market. Sort of tends to float up on low volume. And I think part of that story is because you usually get less news, less data. And actually, the stock market tends to, I've seen this data study as well, tends to do well on periods of time where there's not a whole lot of news. The stock market almost just sort of defaults to just slow drifting during weeks of no news. Then you get big bad news or whatever, causes the stock market to sell off big time. but we're not quite seeing that right now, right? We don't have a ton of news. Now, today is sort of your last day for news. If we take a look at what's coming down the pipeline, we've got consumer confidence coming in just a few minutes. 6 minutes to go on consumer confidence. That's potentially market moving. You also have the meeting minutes later today. But then for the rest of the week, you're talking about pretty chill week. You do have core PCE. That's potentially market moving tomorrow. Then Thursday, nothing US, right? Friday, nothing US. So pretty chill rest of the week. That being said, today and tomorrow could potentially be market moving. You have, of course, unemployment claims as well, preliminary GDP. So tomorrow will be an interesting day. And then you get Thursday, Friday, which are sort of just holidays. GME is flying. What's going on with GameStop? GME, this is not flying. GME flying. When you say GME is flying, I'm thinking like, oh, okay, we're back to. You guys ever see when this was all going down the last time here recently? I know this is. I didn't do anything, so I'm not patting myself on the back here. I didn't take any trades, but I remember being so tempted to be like, we know this story, right? And that guy came back, the GME guy came back for like 2 weeks, put out some tweets, and then stepped away. And I'm throwing it out there. Who knows if there was any sort of collaboration, if you will, between Roaring Kitty and some higher powers to pump this? I have no idea. That's alleged. I've seen things about that. I've seen conspiracies. In fact, in the office, that was our right away conspiracy, is that live stream that he did, guys. GME guy, Roaring Kitty, felt like a absolute total corporate live stream. Just saying. Did not feel very stock standard to the OG GME days, right? Where it was just throwing out wild things and streaming, and it was just way more like manufactured, that last live stream. Who knows? I don't know. I have no evidence of anything, but I do get real questionable about how authentic that return was. But I've never really been a big GameStop trader or anything like that. I've never got involved in the meme stuff. A lot of people lost a lot of money during those times, and you got to be real careful with that stuff. It is a learned lesson for many traders, new investors, to play around with that stuff and to show up every few years when it gets hot, just to kind of get burned, right? You got to be careful with that stuff. Markets are just not something you can just kind of show up and make a bunch of money on and walk away. It's a very competitive space. Nobody wants to give you free money. Anyways, just 3 minutes to go here before we get consumer confidence. Could be market moving. Likely not a huge mover, but it is interesting nonetheless to see how the consumer surveys are sort of feeling, what we're hearing from consumers. It can be really impactful to certain stocks, like for example Tesla. Companies that rely heavily on the consumer. How's the consumer feeling? That could impact Amazon stock, which I've been very bullish on Amazon stock. I've been selling puts on Amazon stock. Right? Some of the consumer discretionary stuff. XLY holds companies like Amazon, Tesla, all of it in one ETF. XLY is the consumer discretionary ETF. It's doing exceptionally well here recently, off of the hopes that, again, you get potentially a stronger consumer with inflation cooling off, rates coming down. The hope is consumers are going to do okay. How's my real estate idea doing? I'm no longer, this hurts. This actually hurts me. I was long real estate, right? Got stopped out. When did I get stopped out? I think I got stopped out over here, and has since left the station without me. Painful. I do trade sectors pretty frequently. I like trading sectors a lot. I'm curious about the XLV, which is the healthcare sector. which has come under pressure here recently, actually, with the Trump returning to office concept. A lot of people are concerned about healthcare stocks. What kind of changes will happen in the healthcare world? If there's big crackdown on drug prices, that inevitably hurts the businesses that sell drugs. If there's increased restrictions on what Americans can eat and drink and et cetera, like that can hurt food businesses, right? There is policy stuff that can hurt the story for certain companies, for certain industries, et cetera. But generally speaking, the healthcare world, I think, is a growing one. Americans have no shortage of health problems, and you can see healthcare over the long term has done very, very well. So if we keep seeing a discount in healthcare stocks, I don't think that a Trump administration is going to completely kill the sector completely, right? I like healthcare stocks. If we get a bigger sell-off here, I may look to start adding more. In fact, I actually already did start selling some puts on Pfizer. And guys, we got 20 seconds. Let me not miss the news. So we'll see. But I do like some healthcare names. If we see some bigger dips, I might get more interested. Breaking news coming in. All right, consumer confidence here coming in just a second. And doesn't look like a big move. So probably coming in right in. Yep, there it is. 111.7 compared to 111.8. Very much as expected. New home sales, however, did come in lighter than expected. We just were looking at real estate stocks. Let's go see if that moved. XLRE. Not so much. The big one, too, is to keep an eye on existing home sales, but new home sales also matter. 610,000 annualized number of new single family homes that were sold during the previous month. Okay, interesting. Anyways, stock market moving slightly lower off that, but still in the green for the day. Got the Dow Jones down actually 0.5%. Russell's down 0.8%. The Nikkei's down here this morning. Chinese stocks, come on, Chinese stocks. This is a losing position for me currently. I have MCHI, which is an ETF that tracks some Chinese stocks. It is actually a pretty broad ETF, but MCHI, I thought we'd get a bounce off the 61.8% retracement when looking at the HK50, the Hang Seng Index. I thought we'd see a bit of a bounce here. Have not seen that bounce. And if we continue to drop, I'm going to take a loss on this one. So not going super hot with this one. I do still have my SMH trade, which is going decent, but not really. It's just gone sideways on me. So I'm waiting to see what happens there. It's got some high correlation to the NASDAQ, but SMH semiconductors have really been not doing so hot recently. Anyways, S&P 500 getting a bullish rating here today. I'm going to keep an eye on this one. If we get some dips or break and retests through the highs, I like the S&P 500 for some possible long setups. It's great to see that on there. Here's some current bearish setups. Still a little bit of a light setup week. And it makes sense. This is a holiday week. So, we're not getting a ton of economic data to change scores around, but bit of a light watch list. By the way, if you don't have access to the Edge Finder, this is sort of your last call here. We only have a few days left to the Black Friday sale. If you haven't picked up a copy of the Edge Finder, we've had a lot of people picking up copies so far this month. But if you're watching with us live right now, you can currently get 45% off the Edge Finder for live stream viewers. Click the link being dropped in the chat, and you can speak directly to a member of our support team who will hook you up with that mega discount. It is the biggest discount price of the year. Saves you hundreds of dollars. We've got thousands of traders all over the world using our data here. If you do not have a copy already, here's your chance to do so at the best price of the year. 45% off saves you hundreds and hundreds of dollars. It's a one-time price to get access. And there you go. Don't miss it. It's ending here. Well, how many days is that? A couple days. I can't do math. 4 days? 4 or 5 days? So don't miss it. If you have any questions, you want to do payment plans, you want to pay with crypto, you want to see some examples, you want to tour, all that good stuff, just let us know by chatting with us for If You Count Today. Thank you very much, producers. So yeah, send us a direct message here if you have any questions, and any of those things that I just mentioned, they can help you out with. So if you want to demo the product, if you want to take a closer look at it with somebody, if you want more information about how the tool functions, if you want to pay with crypto, payment plans, etc., send us a DM. Our support team is happy to help. Do you think the FOMC meeting minutes in a few hours will move the markets? It's sort of always one of those tornado watch events with these FOMC things. They could move the markets a lot, but we never know, right? They could if something gets said that's new. If there's something more leaning like, oh, we are going to take our time to cut rates. If that is leaked in there, then absolutely yes. If they map out something in the meeting minutes, something that was discussed, saying that they actually do see some weakness in the economy, that means they could see rate cuts, then the dollar could weaken, right? So it is absolutely a bit of a tornado watch event, these FOMC meeting minutes. Keeping an eye on them will be really important. So we will be live streaming up until the event. And when that drops, when those meeting minutes drops, we'll be on camera pulling up information about it, and we'll help you out. Help you to understand the best to my ability, and I think Frank will be on with me as well, what those meeting minutes are actually telling us, if anything, or if nothing at all. Again, there are times where meeting minutes move the market big time, and then there's other times where they just don't move it at all. So it's, again, like I said, a tornado watch kind of thing. So we will have to see. Dow Jones lower here today. Russell down 1% today. Got some indices. It's a bit of a dispersion effect here between indices. The Nas is up a little bit. Oil is bouncing slightly from yesterday's sell-off. Gold can't seem to catch a bid. Still going lower, at least for now. Silver, copper, Bitcoin's bouncing. So I mentioned this earlier, but Bitcoin for me is a trade that I'm in. Shared this in the Discord, and I am tentatively going to get stopped out if we break through those lows. But if we can find support here, which I think we could, if we find support here, start taking out those highs again, then it is trailing stop again. So just being patient, letting price decide what I'm going to do here. Nick, what's your net worth? It changes every second because I'm always invested. Sometimes I lose a lot of money really quickly or not, but I'm definitely not going to disclose that on the internet. Anyways, VIX is down 2.74% here. 14.2 VIX just makes it a little difficult for me to, I like to sell cash secured puts, covered calls, things like that. But I don't really love to do that when the VIX is very, very low on the volatility scale. So yeah. Why is that? Well, if you sell puts and calls when the VIX is high, options are selling at a premium, right? They're more costly because people are more worried about large moves in the markets. Like when you get these huge spikes in the VIX, I love to go sell puts, sell calls, because the premium is much, much richer on options during certain times. I do two main things in my trading. I do, three main things. I have a dollar cost averaging approach that I do on the foreign exchange market using a grid trading robot that I've used for years. It's on our website, a1trading.com. You can search for the Grandmaster EA. It's something simple that I've run for a long time. But then I also do two main sort of things I talk about on YouTube. The most common thing I talk about on my YouTube channel is my momentum trading strategy, trailing stops, fundamental analysis. That's my bread and butter. That's the majority of what I do. I also sell options and collect premium for doing so. It's a mean reversion type strategy. And it is very, very slow and steady. It does not make a ton of money quickly or anything like that, but it produces a nice, smooth equity curve to counterbalance some of the jaggedness of my momentum trading strategy approach. So I use three strategies to a degree: dollar cost averaging, option selling, and my momentum strategy. Why would you have to dollar cost average into an EA if it was consistently profitable? I'm not sure what you mean, but dollar cost averaging is just a approach. It's a strategy type. And I like having diversity in what I trade or the strategies that I trade so that all my eggs are not in one basket. If all I do is momentum trade and the market goes sideways for a year, I'm going to lose money. But if I have three strategies, one that works well in range markets, one that works well in trending, one that works well in either one to a degree, but not great, then I smoothen out my equity curve over time. So that is a key secret in trading, in my view, is actually adding more strategies that you actually have. And this is, if you don't even have one profitable strategy yet, then ignore what I'm saying. But if you're like, I've got a strategy that works decently, but then I have these times where it sucks, well, then you might consider looking into adding new strategies to smoothen out your equity curve. It's kind of bit of a hack to trading, is to smoothen out your equity curve with other profitable strategy approaches. Anyways, I believe we have our next guest here coming in. Let me just double check the schedule. Remember, you can always check the schedule yourself. Head over to a1trading.com/livestream schedule or click this button in the top right, just like I'm doing right now. We've got Marco coming on in just a few minutes here to take over the show. I'll be back in 30 minutes after that, 10:45 a.m. Eastern. This is all, of course, Eastern time. And our live stream setup is always here for you to just keep an eye on so that you can make sure you come join at the right times. Marco, who's going to be taking over the show here in just a second, is a really great example of someone who uses kind of a multiple strategy approach in the financial markets. He's also shared his track record on YouTube as well. He's shown us overall his profitability in the markets. He primarily trades currency pairs. So we're going to be doing, we're going to give him the mic here for a little bit, but I just want everybody to stick around, take this next session very seriously, because again, you can learn stuff from people who have different styles and approaches. And in fact, like listening to people who have different approaches or trade different time frames or trade different assets than you actually is a remarkable way to build out or make your own approach in markets more robust. You can learn and hear things from others. So Marco's going to take over the show here in just a second. Before I go, remember, we're currently doing our 45% off sale. It's ending soon. Everything, our VIP group, the stock box that just dropped, the Edge Finder, everything is 45% off. If you want more information, chat with us on our website. Click this link right here in the chat or in the description down below, and don't miss that sale. It is ending very soon. Biggest of the year. Stay tuned. Marco's taking over the show just after this. Enjoy it. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So how this usually goes is I do my analysis of the 6 Forex pairs I trade live which are these ones. Then I do some main instruments as well. But of course, if you guys have any questions, any chart requests, make sure to put it in the chat. I have the chat open here on the side. So definitely put it in the chat. I will go over every single question. Now, let's get into the charts. So we do have a news event, which is the FOMC minutes. Hey, how are you? Follow the trend. So FOMC minutes is coming up in, I think, around 3 hours, 3 to 4 hours. So that's a red folder news event, and it can be a bit volatile. Sometimes it is, sometimes it's not. There is no rules, so we will see what will happen with that. With that, I had a question about your thoughts on NZD USD longs at current levels. Anthony asks, what country are you in, Marco? I am in Croatia. So I'm from Zagreb, Croatia. Tom, what's up? How are you? So NZD USD. NZD USD. What I usually do is I give my analysis on the daily chart, and then I drop it down to the 1 hour chart and take a look at what the 1 hour is doing. I execute every single trade on the 1 hour chart. So I use solely the 1 hour chart to make trading decisions. But of course, it is interesting and important as well to know what the bigger picture is doing. So NZD USD on this daily chart is in a downtrend. Okay, so it's in a downtrend, moving down, breaking the lows and retracing. So not the best momentum. I mean, you can compare this one to, let's say, EU, which is just dropping heavily. And each time we break the low, we get a lot of momentum. So it's not looking as strong as some of the other pairs, but it's looking pretty good. So the daily chart is in a downtrend. If we zoom in on the 1 hour, choppy. Choppy as every single currency pair on the 1 hour chart, or every single dollar currency pair. Unfortunately, we are in this range right here. One pattern I can see, so I usually like to trade patterns. I can see a bullish V reversal right here, so I expect some upside to happen. Okay, I expect some upside to happen from this level. But again, not the best price action, so I would be bullish on this 1 hour chart, but not that bullish. I would be pretty careful about any longs. Of course, you need to follow your own plan. You shouldn't really care what I have to say about this, because trading is a game of basically having a large sample size, knowing what your trading edge is, having some good backtesting data, and trading off of that, right? So we do not base our analysis on only just one trade. We base our analysis and trading decisions on the last 100 trades. Euro Aussie is the next one I can see. Euro Aussie. Let's start with the daily chart. And the Euro Aussie on the daily chart is looking more flat than the dollar pairs. So as you can see, looking a bit more flat right here. But if we zoom in on the 1 hour chart, which of course I like the most and I trade, it's actually starting an uptrend. We had this pretty nice downtrend, pretty nice bearish momentum. Now price has flipped and we are starting to push up. This is looking interesting. So my bias is bullish on the Euro Aussie. And I would like to see something like this happen. I would actually like to see an entry. Maybe a little bit more momentum up, like this. And then some sort of a continuation entry, maybe a flag, or a pullback, break of the high, retest of the high. So that would be interesting for me on the Euro Aussie. He's in the United States of banana. Something like that. So you're purely a swing trader then? Yep, I'm only swing trading. I'm not a scalper. I'm not really a day trader. I get like maybe 4 to 12 trades per month. I would say that is the average. Gold and silver. Okay, so I have a bullish bias on Euro Aussie, but currently not producing any setups. So gold is on the daily chart. Actually, I mean, we have printed this V reversal. That is a bullish pattern. But then the sellers took control again with this candle. So that is not great that the sellers are back in control. Looks to me as, yeah, this looks kind of bearish. Kind of bearish because of this last candle, last daily candle. On the 1 hour, this would have been an entry for me. This would be a nice sell setup. You have some very nice bearish momentum. So first leg down, pull back, another leg down, pull back, break of the low with momentum. I would do something like this. Basically wait for the price to retest this level and then get in on a sell setup. But now we have started to range around a little bit. So we started to become a little bit flat on the 1 hour. My bias is definitely for this to go down. Okay. So I'm bearish. I'm bearish on gold. Silver was the next one on the list. It's becoming bearish. So kind of like gold. We had this big move up. So a big move up. And now a bit of a correction has started. So the same thing on silver on the daily chart. Yeah, basically bearish momentum starting to kick in. Let's zoom in. Gold looks cleaner. Gold definitely looks a bit cleaner, but still silver is pretty bearish. You have one big leg down and then another big leg down as well. So a bit of a range now, as we saw on gold right here. But I would expect for this to continue actually going down. Yeah. So I would expect more downside on silver. GBP/USD is gonna be the next one. So I actually trade the pound US dollar. Let's see the daily. The daily is in a big downtrend. Very nice, very strong downtrend. So this is great. If you're a trend trader, this chart looks very, very good, I would say. Some really nice, really strong momentum down. This pattern looks very bearish. You have a big leg down, pullback, break of the low with force. And I would expect definitely more downside. This is a very, very bearish pattern. And there's a lot of momentum pushing pound Aussie down. 1 hour is going to be a bit flat. Okay, 1 hour is going to be a bit flat, unfortunately. So I would have to wait. My plan is to be more patient. I'm actually waiting for another leg down with the overall downtrend, right? See this overall downtrend. I'm basically waiting for the price to possibly follow that downtrend and push another leg down on the 1 hour chart, and then for a nice sell entry. Okay, that is my game plan on the pound US dollar. And I'm very bearish. I'm very bearish on EU, AU, and GU as well. Very bearish. Hey, good morning, Nick, Alex. So gold we covered. No worries, follow the trend. Mark says do not long NZD/USD, literally cutting rates this evening and probably the weakest fundamental data of all USD pairs. That is interesting. So currently I don't take fundamentals into my analysis. Yeah, I'm looking into a new trading edge combining technicals and fundamentals. But currently, I'm not following the fundamentals, especially not on the New Zealand US dollar. But again, if that is something that you do, if that is something that fits your plan, if you make your trading analysis or trading decisions based on fundamentals, then definitely follow your research. Paramedic, what about that daily head and shoulders? If you can mention which instrument, so I can go back and take a look. Investing with Ian, what do the red lines mean on your chart? Okay, so the red lines basically represent the most recent high and the most recent low. It's super automatic. It's basically a program. It's an indicator, a free one, this one. See? So it's basically an indicator. And it kind of helps me to see when the swing lows or the swing highs get broken. See, this is a swing low. This is a swing low. This is a swing low. This would be a swing low. This is a swing high. So it helps me to spot a trend more easily and spot some different currency pair or price formations, such as let's say a clean descending channel, which is a bullish pattern. So that is what the red lines mean. Basically, this is the most recent swing high. This is the most recent swing low. And these are all of the breaks where the prior swing highs and swing lows have been broken. See? So here you can see a downtrend slash a descending channel because the price is only breaking the swing lows. On Euro Aussie. Euro Aussie daily chart, you said? Yeah, I can see that. I can see it. Left shoulder, head, right shoulder. So that's a bearish pattern and it may play out. But again, there is some room for the price to still go up. Maybe up until this swing high. Okay. So yes, definitely I'm seeing a pretty clean head and shoulder pattern on the Euro Aussie. So you could say that the daily chart is bearish, but the 1 hour chart looks okay with this momentum. That is why I'm being bullish. I basically base my analysis on the 1 hour chart. Okay. That is my focus. USD CAD. USD CAD is actually a currency pair that I'm researching right now. I'm backtesting it. So let's see the daily. The daily is actually bullish. So dollar is gaining strength, as we can see right here. Not as clean as, let's say, the euro and US dollar with this big, nice, clean, strong uptrend or downtrend, sorry. But still, it has some potential. If you're a trend trader, this looks pretty good. If we zoom in, so this is what I actually base my analysis on, is the 1 hour chart. I'm seeing a lot of bullish momentum. A lot of bullish momentum. Some selling pressure starting to kick in. That's problematic. So what I would have liked is an entry setup to happen right after this candle, like a flag or a nice pullback, break of the high, retest of the high. So I would have liked to see that. None of those things happened. We just got a lot of selling pressure. That's pretty bad. That's pretty bad. My game plan would be to wait and see if the price can actually continue. This is a nice descending channel. And a descending channel is a bullish pattern. So it's not really a surprise that we got this move up. But if we can continue up, do this, and then get an entry, that would be pretty high probability. So if we can kind of wash off this selling pressure, if the bulls can start winning again, then I would be very happy to look for buy setups. Okay. Okay. Swing high, swing low. Yeah, basically, Sean got it. So the indicator shows the swing high and the swing low. could you show us how you trade the flags? How do you enter? Yeah, sure, I can show you a flag. I can show you a flag I took last week. It was a loser, but it was still a good flag. So I hunt for momentum on the 1 hour chart. You had this sort of a descending channel, which is a bullish pattern, but you had also this very nice, very strong momentum, super bullish print, very big candles going here. And then I find an impulse, and then I look for a flag. So I basically look for that small entry setup. We then print the flag. Let me show you. This is a flag. It has 4 main points: first high, first low, second high, second low. Blue candle is the entry, so I actually market order at the close of this candle, 10 pip stop loss. I use a fixed stop loss. And then I use a trailing stop loss to get out of the market. So this is how I get in. Why is it called the flag? It's also called an ABC Elliott wave pullback. It's the same thing, but different name. Because this impulse is kind of the pole of the flag, and this formation looks like a flag. So that is why it's called a flag entry pattern. Very simple stuff. I mean, a lot of traders use it. Really, a lot of traders. I use the main entries that most traders use. Those are the flag, or the ABC Elliott wave pullback, and the break and retest. I think Trader Nick uses the break and retest as well. I use one more, which is the reversal, but the main ones, the ones that make me the most percentage, is the flag and the break and retest. Super simple stuff. Super simple. Okay. USD CHF. Yep, sure. Let's go. USD CHF. Daily. Daily is pretty bullish. Daily is pretty bullish. The buyers are definitely winning. I mean, the dollar is strong on every single currency pair. You're gonna see dollar strength on every single currency pair. Are the sellers winning right now? No, not really. I just look at the size of these candles. So I just use a simple visual assessment. And these candles are not that big when compared to the candles going up. So I'm pretty bullish on the daily chart. While on the 1 hour, starting to see a little bit of a downtrend. So you could be looking for sells here. You could. But it's not that strong. This downtrend is not that strong. You can see some bullish rejection happening. The sellers are only winning in just the last couple of hours. So for me to kind of get the confirmation to sell or get the signature to sell, I would need one more leg down. So I would need one more leg down, and then I would get in on, let's say, a flag. That would be my game plan on USD CHF. So GJ and UJ. Yeah, sure. GBP, JPY. Let's see these ones. So the daily is bearish. But again, am I seeing a lot of momentum on the daily? No, not really. I'm kind of seeing a descending channel, which is not that great for hunting momentum. Zooming in 1 hour, it's looking very descending. Very, very descending. Usually these sort of patterns, when I see a descending channel, in Forex at least, I know the indices like to trend in this manner, but in Forex, you usually get an uptrend after a descending channel. So I would not be surprised if we actually get an uptrend from this point or maybe a bit later. Without the signature, I wouldn't do anything for sure. But if you get the bullish signature, then it's like the odds are in your favor for the price to go up. USD JPY, that's a pretty important one. Let's take a look. USD JPY, uptrend, definite uptrend. A bit of selling pressure, but I'm still bullish on the daily chart on UJ. Definitely bullish. 1 hour, it is again printing that sort of a descending channel where the lows are being broken pretty correctively. Price is breaking and leaving large wicks. Okay, so that is pretty problematic. Breaking and leaving wicks. Am I seeing momentum? Am I seeing a nice downtrend? This would be a nice downtrend. Each time we break the swing low, we get momentum. No, I'm not seeing that. Each time we break the low, we actually get a lot of weakness and no conviction. So this is a bullish pattern, and I would not be surprised if the 1 hour follows the daily chart. And if this thing goes up, if you get the signature, then it is high probability to be a buyer in this market. What about indices? US indices, for sure they're on the list. So we will definitely cover the indices. Indices, S&P. Starting with the daily. Daily is the most important for the S&P, for me at least. And this is what I mean when I say that the indices like to trend in a channel formation. So the pullbacks can be a bit deeper here, and they can follow a specific trend line. Now, it doesn't really matter how I put the trend line, but you can see that some sort of a trend line is being respected every single time. I'm super bullish on the S&P, to be honest, especially after the result of the US elections. So I think the fundamentals are behind it, and I'm just not seeing I'm not seeing a lot of selling pressure either. This was a bit of news from Russia, but we have recovered most of that. So bullish on the daily chart. That's pretty nice. And this looks pretty choppy. This is exactly why I have a little bit of trouble adjusting my strategy to the S&P, because this is how the S&P trends. It's kind of choppy. You could be a buyer on the bottom of this trend line. You could make a play with that. But for me, I like Forex a bit more. I like how Forex trends. Big legs up, small pullbacks. Big legs up, small pullbacks. But yeah, I'm bullish. I'm bullish on the S&P, both on the daily and the 1 hour chart. I think it looks pretty healthy for what it is. Okay, the daily on NASDAQ. Look, NASDAQ is going to pretty much follow the S&P. So yes, a little bit of a drop, but we are recovering. So still bullish. And the 1 hour, pretty dirty formation. Lots of gaps, lots of wicks, lots of chop. But again, overall moving up, overall trending up. So bullish. I'm bullish on the US indices. I'm bullish on the US economy. I think it's looking pretty healthy. So how hot is it in Croatia? I think it's 13 degrees. So I wish it was a bit colder, that we get some snow. I love snow, but it is around 13 degrees. So the Czech family, hi Marco, do you have a link to your MyFX book? Well, I don't have the chat open, so I can't comment, but if you search MyFX book for Marco's journey, so you should find it, or go to my YouTube channel, which is Marco's Trading Journey on YouTube, and find the video where I go through my MyFX book. Okay, so you can either search me on MyFX book at Marco's Journey, or you can go to my YouTube channel, Marco's Trading Journey, and then find the video where I go through my FX book. I think gold short interest still pretty well. Yeah, we did cover gold, but let's quickly refresh. So refresh on gold. I mean, the sellers are winning in this, or they have won yesterday. Current candle is indecisive. But for me, the sellers are kind of still in control, to be honest with you. This was a big bearish candle. You also had this drop as well. So if I had to pick, I would say I'm bearish on gold just by gauging the momentum. DXY, please. That's a good one. That's an interesting one. DXY, that is really important for the three of the pairs that I trade. And the DXY is, for me, still pretty strong on the daily chart. Massive uptrend, The only selling pressure that I was seeing was here, a little bit here, here as well. But again, just by comparing the selling pressure to the buying pressure, I think the bulls or the buyers are still in control. And I'm pretty bullish on the daily chart. So just the pullbacks don't look that strong. The bullish pressure looks very, very strong. Zooming in, it's a bit flat. So since we have opened, we had a bit of a gap, actually a pretty big gap. That's the same as I saw on EU, pretty large gap. It's not yet filled. Usually, in my experience, gaps get filled pretty quickly, either in the same week or in the upcoming couple of weeks. So you could expect for, let's say, EU, for the price to go down, fill that gap, and then maybe go up, or sorry, go down, fill the gap, and then maybe continue down, right? I think there's a high probability chance that that will happen. Back to DXY, 1 hour is looking flat and choppy, but the daily is still pretty strong, still trucking up and looking very healthy. GJ, we did, I believe. Andrea says, hello, what strategy are you using? Sorry if you already mentioned it and I missed that. No, I didn't mention it. So it is the Zentum trading strategy if you guys want to check it out. So Google Zentum trading. So Zentum trading. You have it also on my YouTube channel, a link. If you want to learn to trade, definitely take a look. It is basically a trading community, trading education, and I built it with my two very good friends, Nico and Griff. So yeah, if you want, take a look. NASDAQ. We did NASDAQ, didn't we? Yeah, we did. US indices. Bullish on NASDAQ. GBP, CAD. You guys got me doing all of these crosses. Let's take a look. Maybe we can spot something interesting. I would be bearish on the daily chart. I think the sellers are still kind of in control, but it's not looking that decisive. 1 hour. One thing I do like is a bearish pattern, which is an ascending channel. So for me personally, price is clearly breaking the highs and retracing, not seeing a lot of bullish momentum and dropping right now. So more downside is expected for me, or in my opinion. 1 hour, a bit of a relief, bit of a push up, starting to ascend, seeing again an ascending channel. Would I be looking for any setups here? No, not really. I'm not seeing clean enough price action for setups. I'm very picky. I'm very patient. I need the market to be absolutely perfect to take a setup. So most of the time, like 95% of the time, I'm just going to be saying markets are not that good for me. I'm not seeing a great pattern. I'm being more patient. And then 5% of the time, I'll actually be looking for trades. But if you want a general bias, I'm bearish. On GBP CAD, I'm bearish. Joseph says, any possibility for UJ to buy? I mean, UJ is super strong, or at least like the dollar is still gaining strength. I'm bullish. Is that a signal? No, of course it's not. You should follow your own plan, your own back-tested trade plan and trading edge. But I just can tell you that I'm bullish. Daily head and shoulders on Euro Aussie can be respected. Yeah, sure. We did cover that and it's looking interesting. I think it's a pretty clean pattern. I haven't seen such clean head and shoulders in, was it EuroCAD? No, Euro Aussie. I haven't seen such clean head and shoulders pattern in quite a while. So could be respected. No signature yet. A signature would be a big drop down. That would be my signal to sell, but not happening just yet. You don't use pivot points. I don't believe I do use pivot points. I only use highs and lows, like swing highs, swing lows, pure price action. Yeah, no worries, paramedic. RSI divergence in USD CAD. So if you're getting confused, if you have too many indicators on your chart, I highly suggest you remove all of them. Start from scratch. Keep it simple. I know when I was just starting to trade, I had 3 indicators on the chart. I was so confused. It wasn't working. There were a lot of different signals from the 3 indicators, and it was a mess. So my best advice would be to run away from indicators, learn what I think is best to learn in trading as a beginner: pure technicals, pure price action, momentum, support and resistance, so basically highs and lows, and fundamentals. Okay, those 3 things you cannot go wrong. As a starter, if you master one of those 3, I think that's great. Indicators, not my thing. Okay, what about GBP CAD? Yep, GBP CAD. But this is an interesting question from Andreas. Hey, Marco, what's up? If you have 2 setups at the same time, let's say Aussie US dollar and Euro US dollar, would you take both of them, split the risk, choose only one? I would take both. That is currently in my trading plan. If a setup forms at the same time on 2 currency pairs, I take them both with 1% risk. I actually had basically 6 trades or 5 trades form at the same time on 5 of my currency pairs. I think it formed on these 5, not NJ, but these ones. And I didn't manage to take all of them because I have only 1 to 30 leverage on my broker, but I took 3 trades. So I took 3 trades with 1% risk, and it paid off massively. It was a big free winning trades in the end, I believe, if I remember correctly. Okay, GBP CAD, we said. GBP CAD. Starting with a daily, I think we covered it. Yeah, we did. I got lost. I'm bearish. I'm bearish on GBP CAD. USD CAD 1 hour has a beautiful bullish flag. Let's see. USD CAD. I think it's not such a great flag. So this is a valid flag. This is a valid flag. First high, first low, second high, second low. This would be my entry. Okay, I would do something like this. One key thing for me, a bit of a bigger stop, 30 pips, yeah. One key thing for me is I don't want to see any opposing momentum inside of the flag formation. So if we're actually going up, I don't want to see a lot of selling pressure in the flag. That's not good. Usually those flags tend to fail. So it is a valid flag, but it's not high probability in my book. I want my flags to be small, and I don't want to see any selling pressure. I want to see something like this. Nice small flag, just a bit of a pause, a little bit of a pause before the bullish momentum follows. Okay. So it's a good spot, nice spot of a flag, but I don't think it's high probability. Thoughts on the upcoming inflation news release for the Aussie dollar? I'm not following the fundamentals currently, so I cannot help you a lot with that. Nick has some great software, the Edge Finder, so you should check that out if you want to learn about inflation and fundamental analysis. Flag on a 1 hour, really, yep, taking flags on the 1 hour chart. NAS 100, NASDAQ recovered, super bullish. Do you use anything like a strength meter or something to know what currency is strong or weak? No. I only gauge the chart. I only gauge the momentum. And there is only 3 cases. It's bullish, it's flat, or it's bearish. That is the momentum. So this would be flat, right, on the 1 hour chart. This would be super bearish. Momentum is super bearish. This would be bullish because it's moving up. So I gauge the strength by looking at the price chart, by looking at the momentum of the candles. Do you factor in fundamentals when you look for setups? Currently not, but I'm looking to find a new trading edge by combining fundamentals and technicals. And I'm sorry, I think I ran out of time here. So I think it's time to wrap up the stream. But until someone appears, okay.
Hey, Marco.
Hey,
How's it going, man?
it's good. I'm good. How are you?
Good. And thanks for taking over the stream for a little bit here, guys. We have Marco come on a regular basis. Of course, I hope you guys enjoyed that commentary from him. And I am eager to see or hear about how you potentially combine fundamentals and technicals at some point, Marco. It's always interesting for me to see that, because at some point I was in that camp where I was like, okay, I'm trading technically only. And it actually, I had some profitability without fundamental analysis. But then I really liked the framework that fundamental analysis kind of gave me to go with my technicals and really improved it. But again, it is a very personal journey. Trading is like really very much what jives with you. It's the same reason why, here's another hot topic. Some people like love to bash or go to war over the whole ICT stuff, right? Like, oh, I trade ICT, smart money concepts, etc. Honestly, here's my genuine opinion on that stuff. I don't really think it's anything more special than standard technical analysis. However, for many people, the framework, the naming conventions, the way it maps out a chart for them, if that makes it easier for them to understand, it's not my thing. But if somebody is able to see the chart a little bit better through those methodologies, then hey, great, do what works for you. Would you agree?
Yeah, absolutely. I mean, I think it all works if you actually apply it on a large sample size. If you make the winners bigger, losses smaller, I think every single strategy can make money if you stick to it long enough.
Absolutely. Well, and guys, I also want to just encourage you to if you are not already following Marco on his YouTube channel, the beautiful thing about today's day and age is that content from Marco is free to enjoy on YouTube and to learn from. You don't have to pay a dime. YouTube connects us all. You guys can tune into this stream. You can check out his content. I know, Marco, you've been doing some of your own live streams. So if you guys want more Marco content, make sure we'll drop the link here in the chat to go subscribe, go find his content, and make sure you show him some support, show him some love. And thank you very much, Marco, for coming on the show today.
Thank you. See you next week. Bye.
See ya. All right. Now we have our next guest here. Let me see. So sorry, I haven't shared my screen. So let's see. I'm pulling up the live stream schedule here for a second. So this is what we've got lined up for the rest of the day. We've done my stream, and then Marco just pieced out, which great content from him. Again, definitely. I say that every time we have a guest, like, oh, make sure to go support him. But genuinely, it's how we do this show. We don't pay people to come on this show. We make a trade, for lack of a better term, with everybody who comes on here. They come on, they get a bit of an audience boost, and in return, the A1 Trading Show gets more content, and the consumer, the audience, gets the biggest reward, which is free content every day, and we do all the work to put it together. So it's a win-win-win all the way around. So that's why the A1 Trading Show has been on fire. We've had an incredible year. 2024 has been, if the A1 Trading Show had a stock, it would just be up with no pullbacks, because we've had incredible guests join us and new hosts this year, and it's been amazing. Really, really cool thing for the community, and I hope that we can continue that into 2025. So we have me on the calendar here, and then just in a few minutes we'll have James taking over the show, and then our other James, A1 Trading James, is going to be doing a bit of a giveaway at 12. So we've got a good lineup. I'll be back at 12:45, and then we're going to go through to meeting minutes, which meeting minutes will be a lot of fun. We're going to react to what potentially could be market moving stuff. Let's just take a quick check on the markets at this moment. We have the NASDAQ up 0.3, S&P 500 barely positive, but coming back. We had a bit of a sell-off here this morning, came back here. What has not come back so much is the Dow Jones, the Russell. Actually, the Russell's trying here. The Nikkei down 1.3. Chinese stocks can't catch a bid. I might just be taking a loss on this trade. Went long Chinese stocks around this area of support and have since nothing good just yet. But hey, this trade's not dead yet. It could bounce. We could see the continuation. My thought process on Chinese stocks is a bit of a contrarian idea for 2025. Is Chinese stocks have been hated all couple last years. I mean, look at Chinese stocks. Even after the big pop, they were still very, very down since the highs in 2021. And by the way, the all-time highs back in 2018 here for the Hang Seng cash index here. Point being, I think that they have potential room to do more stimulus programs to try and compete with Western rivals. It's a contrarian trade because Chinese stocks have been in the dump for the last few years. But, you know, if I'm wrong, I'm going to take a small loss on this. Gold is flat for the day. Silver is up 0.5%. Copper's down about 0.5%. And you have oil up about 1% here today, bouncing back nicely from yesterday's sell-off. Yesterday, I think oil was down like 3%, which, yeah, I mean, 3% is a pretty good haircut for the price of oil for the day. Bitcoin can't seem to pick a direction. And I've said this earlier, and I'll say it again. With Bitcoin, if I get taken out, that's it for now. I don't have any new setups on Bitcoin. I don't want to, after I took the trade back here, I really think that was the only place I'm really comfortable at it right now. I feel like the retail monster has attacked Bitcoin, which is great if, we continue momentum, but I find a lot less good risk reward trade setups after all of that hype coming into the price of Bitcoin. That being said, it doesn't mean I think like, oh, it's going down from here. I think it could continue. However, if this thing tanks through the lows, that's going to be it. I'm going to take profits on this move that I've had on Bitcoin. But if we can spike through those highs and make it to that 100,000, then great. And you might say, well, Nick, isn't it certainly going to go test 100,000? And there is absolutely an easy answer to that. There's no certainties of anything in trading. Nothing about markets is guaranteed. Stuff is hard. So 100,000 is not promised, right? There could be some heavy-handed sellers that have already, come in and they've decided, oh, we're going to go back down to 60,000. I don't know, right? I like the overall story for Bitcoin. I like the momentum that we've seen recently, but I'm not married to it, right? I have a wife. That's the only thing I'm married to. I'm not married to a chart, right? I'm not married to Bitcoin or Nas longs. Like, I trade what's in front of me right now. I like the momentum for Bitcoin, but I'm not like a Bitcoin forever hodler. Now, there are stocks that I'll hold forever. There are companies that I really like, and I'll hold them long term and things like that. But for Bitcoin, I'm a Bitcoin trader only for now. Maybe that changes in the future, but I made some good money on the momentum side, but I'm not going to let this thing, I'm not going to get lost in the sauce, meaning I'm not a permabull that believes, I'm going to buy here and it's going to go certainly higher. And if it doesn't, I'll hold it forever, because you know what? You know who makes money in crypto over the very long term? And this is just highly biased, but people who take profits make money in crypto. Now, if you've held Bitcoin the whole time, then yeah, you made incredible gains. But Bitcoin has these insane pops and drops. And we've had a long run here that could end at any moment. So that's why I love trailing stops for Bitcoin. I'm trading the momentum, but as soon as we go back into this territory, as soon as we go back into a crypto winter, whatever you want to call it, basically, long story short, a risk-off environment. Crypto traders think they're coining new phrases or things or coming up with things, but they're not. It's a risk asset. It goes up when things are good. It goes down when things are bad. Point blank, period. I am not a crypto hater. I'm not a crypto lover. I'm a trader. I have no loyalty to crypto. I'm trying to make money, right? And so what that means is that if you let your emotions, oh, it's going to change the future, it's the next big thing. Nobody knows the next big thing for certain. There's one thing that I've found in markets that you can control. It's not making the right decisions of what's going to happen in the future. That's hard. That's really hard. The one thing you can do is you can manage your position sizing and your exits, right? I mean, I guess it's two things, but you can manage your position sizing. That's the one thing you can control. You can allocate in different areas. You can diversify. You can leg into trades, meaning not going all in on one first attempt, etc. Like, you can do different position sizing. That's what you can control. But none of us can control what the price of Bitcoin does, right? I may have an opinion. You may have an opinion. You may think it's going down. I may think it's going up. One of us will be right, but you could be right and still lose money if you're being irresponsible with your risk. Risk sizing is the number one most important thing in trading, in my personal opinion. It is a game changer. Anyways, Nick, now that you have a stock screener, you think about bringing in stock traders for the daily show. It's a good idea. I would like that idea. We don't have a huge stock following. I think it's grown over time. More people are interested in stocks that watch the show, but maybe in the future. I don't know. It's a good idea. Anyways, guys, our next guest is here to take over the show. It's Forex James from Elite Traders. And as we transition here to his show segment, which of course is one of our most heavily sought after segments, we got bangers lined up today. We got James, Marco. You guys get to hear from Frank later on. It's a great show today. So enjoy it. If you're enjoying the show, by the way, hit the thumbs up button. It does really help just to support what we're doing here at the A1 Trading Show each and every day. And don't forget, our 45% off sale is ending soon. Black Friday week is here, alive and well. You get access to the stock box, to the Edge Finder, to the VIP group, and more. Everything is 45% off for a very limited time. If you want anything from our store, 45% off, DM us. We're going to drop a link here in the chat to where you can speak directly to a member of our support team who can hook you up with that special discount, do payment plans, pay with crypto, give you information, give you examples of our trades if you want VIP access. All of it can be accessed. Just speak directly to a member of our support team here at A1. And now we're going to take a quick break. Up next, we got Forex James. Stay tuned.
Looks like we're receiving a transmission. I think it's an alien, which is pretty cool.
Okay, all right, I'll go check it out. Beam me up. Whoa, hey guys, I come in peace.
Hey, you're back. What happened?
Well, they gave me this.
The A1 Trading Stock Box, an advanced market scanner of top stocks, ETFs, insider trades, and analyst ratings. Unbox smarter insights and discover opportunities with powerful data at your fingertips. Get your stock box today with our out-of-this-world Black Friday sale happening all month long.
See ya.
See you later.
Hello. Hope you're all having a great day. I hope you're having a great start to the week as well. So just before we start, for anyone that doesn't know who I am, this is my FX book. I like to do this as much as I can, just to give you give me the credibility I need to be able to tell you about the markets and things. So it's a relatively new account, but I'll skip why. So it's up just under 11% in total, up 6.42% this month, 1.69 in October, 2.35 previously in September. So there you go. That's a little bit about me. I'm not one of these furus that doesn't know what they're doing. And first of all, like to go over what trades I'm in and why, and then we can move on and take some chart requests and things. So again, anyone that does know me will know that Eurodollar has been essentially free money recently. So I benefited again from that this morning, entered a short position here and another short position here, closed out for, I think it was around 2%, something like that. And I'm in EuroCAD. So there was a couple of people talking to me about EuroCAD, and they were like, oh no, did we take the wrong side? You know, obviously we had Trump put 25% tariffs on Canada. This was literally right after I entered, basically. We saw this rocket to the upside. Do you think I'm scared? Who do you think I am? obviously I entered again and again and again because it's me and I know the trades, I know why I'm taking them, and you stick to your conviction in the markets until you have a reason not to. Successful trading, in my eyes, is about understanding more than just candlesticks. It's about knowing why the markets are moving. Sure, we had some short-term bullish noise, but that's perfect because I can just get back in. So that's it. No stop losses. Got my take profits down here at the bottom of this market gap. I still expect this to get filled. It might take some time. Don't care. If it goes up again, I'll sell again. So that's about it in terms of what positions I'm in. You are lucky, James. I've been kicked out just before the turnover today. Not lucky. It's called using no stop loss. It's just the way it goes. And that's why I don't use a stop loss, because I will only exit. Well, obviously it depends what strategy I'm trading, but generally, if I'm not using stop losses, because I have a strong bias one way, and I don't care about the short-term noise because I am, 99.9% sure that I am right over the long term. So I'm happy to hold the drawdowns, happy to hold the profits and let it run. Of course you did, paper hands. Fair enough. Currently eating Euro CAD because of the Edge Finder. Exactly, Cedric. Edge Finder was a great confluence into this trade. Unfortunately, like I said, the entry wasn't the best, but it was, it was out of my control. I had no idea that the announcement from Trump was going to come at this time. So, what can you do? But the entry initially was off this fib zone. Obviously, it was on the Edge Finder as a bearish reading. I think it's actually gone off now. But yeah, it's pretty simple stuff. Obviously, Europe's data is very unsupportive. We've got nothing really in favor for the euro at the moment. So yeah, currently just milking that to the downside. Yes, but the Trump announcement could drive CAD lower. It could, definitely could. But my conviction on the euro is pretty strong. Again, there is nothing there that makes me even consider buying. Maybe I'll close the trade eventually. Well, obviously I will eventually, but yeah, right now it's fine. Ain't that too confident? No, because in trading, you've got to be confident in what you're doing. So, for example, if I'm in a trade and I'm sat saying, oh, no, I don't know what to do. Should I close? Should I hold? That's bad trading. You don't know what you're doing. You shouldn't be in the markets. You especially shouldn't be putting your hard-earned money on the line if you don't know what you're doing. Obviously, I'm sat here being all confident, sure, but please don't mistake me. I'm not the best trader in the world by any means. My win rate here is, where is it? Here, 65%. But obviously that includes scale ins, scale outs and things. So it's not 100% accurate, but there you go. But yeah, no, I mean, the confidence in trading is a requirement. Obviously being egotistical is a problem. I'm not going to sit here and say, oh, I'm just going to sell this asset, buy this asset because I can't be wrong. That's just not the case. But when I'm right, and I have the overall conviction on an economy or a currency, then fine. But anyway, that was enough. Enough of that. It was quite a confident or egotistical talk, some would say. But there you go. So what's going on in the markets? Euro dollar is still not recovering, which I don't expect it to. I also am still looking for this market gap to get filled. We did see a dip. This was just after market open. And this, the dollar did do very well off the Trump tariffs. And that's what this spike to the downside was. Very quickly recovered. And now it looks like we're heading back to the downside again. Pound yen has been bouncing off 192.9 since Friday, just break lower already. Yes, I'm actually I'm actually long on the yen, short on the Swiss. So this is the position, essentially just piggybacking off the the Morgan Stanley position they've got here. So you can see theirs is actually the better entry, unfortunately, and mine is the slightly lower one down here. But the main reason I am bullish on the yen isn't because of central bank talks or anything really fundamental at the moment. The only reason I'm considering going long on the yen is because of an intervention. It's been very, very clear that they are wanting to intervene, and they do need to intervene. And if they don't intervene very soon, the yen is only going to get worse. So that's essentially what I'm doing. Now, obviously, you can't time interventions. I've been saying this. It's not something you can say, okay, well, it's going to happen on Monday or it's going to happen next week or whatever. You've kind of just got to either be there or not. Euro yen still showing some selling momentum. Yes, I think euro yen to the downside makes sense, especially, you know, if you are looking to trade some short-term strength off an intervention. I'm not saying you should do that because, again, you can't time it. It's a bit of a strange thing to try and trade, in my opinion. But with the euro weakness and the potential for the yen to strengthen significantly, I think that short positions are starting to make quite a bit of sense. But price movement is very slow and corrective. They drop it out of nowhere. My DT stats are all yen based. Yeah, the MOF doesn't announce. I'm fairly sure on the one back in July, they didn't actually own up to it. They didn't. Maybe they did, but I'm not 100% sure actually. But I know at the time they were very dismissive and they didn't admit to intervening when it was very clear they did. But yeah. So yeah, the yen isn't my favorite thing right now. You know, it was free game really for a very, very long period of time. So if you look here on the daily time frame, let's see when. So since let's say here 2021 up until mid 2024, that's 3 years of essentially straight buying. Obviously we had some dips and things, but it's very much like the S&P in terms of it was just a buyer's market overall. And now it's not quite the case, or it's a little bit more difficult, I would say. Euro pound still on the watch list. I don't think I'll get into this market though. It's horrible price action. Very difficult to get a systemized entry in there or a mechanical entry. Dollar yen, not really too interested. I would be more leaning towards a long, to be honest, but again, the intervention is putting me off trading the yen at all, really. Dollar CAD looks fine. Didn't quite get this retest, so I'm not in this position here. But if we can see a slightly lower price, retest previous structure, I'd be more than happy to go in long, especially as we are expecting to have lower oil prices into 2025. New Zealand dollar, I'm not, but the Discord is still in New Zealand dollar shorts here. So that's going on fine. Euro AUD. I like the idea, but I don't like where price is, so I'm going to ignore that one for now. The S&P is a little bit of a shame, actually. I think it was yesterday someone mentioned the S&P, and I was having a look. I said it looks really good to buy. Problem is, I'm not going to buy it because obviously we've got FOMC, and we still have previous all-time highs that are kind of acting as a bit of resistance around here. So it's not perfect for me, but it does look like a relatively strong entry. Oh, they did admit to it after. Okay. It's a good analogy. It tends to track with decent level of correction, salt and pepper. Yeah. Dollar Swiss. Yeah, we can have a look at dollar Swiss. I mean, yeah, it doesn't look bad. If you were wanting to capitalize on the dollar strength and possibly see a market gap get closed, this is probably not too bad of an idea. You'd need to do this on a shorter time or a smaller time frame to make the R&R worth it, unless you're happy with sort of a 1-to-1 or 1-to-1.5. But yeah, this makes sense. Again, that'll be mainly trying to capitalize off dollar strength and a market gap fill. But beyond that, it's not really for me. Dollar Swiss doesn't have any super compelling economics behind it that make me really want to be a buyer or a seller. The edge find is really slimmed down, actually, though, what's on the watch list here. So we've got the S&P is bullish, which again plays into our potential long position quite well. Pound CAD, New Zealand yen, Euro CAD. Oh, Euro CAD's back. I must have missed it before, but that's still reading bearish, which is nice. New Zealand dollar CAD is bearish as well. Not bothered about New Zealand CAD though. I think the New Zealand dollar isn't in the best place, especially comparing to some of the other G10 currencies. Let's see how EuroCAD's doing. So if we're finally coming back to our entry. Slowly we are. Almost there. Can you have a look at Australian dollar, New Zealand dollar longs? Can it hold current level? I've been watching the Australian dollar, New Zealand dollar for quite a while. Finally having what I wanted, which is a little pullback off this resistance. So I'm looking to buy off this trend line if we can. But I understand what you're saying. We are at sort of the next level of resistance through here. It's possible. So we've got brush. We've got the 50 moving average here. We've got the 200 moving average here. We've got the RSI that's about to become oversold down here. So I guess you've got a few options. We either see a rejection to the upside from here, we come down slightly further, retest our 200 moving average and continue up, or we come down to our trend line and continue up. So that's kind of the view I've got. Maybe not too helpful, but there's definitely a possibility that the current level will hold. I'm not super confident though, just because the momentum looks quite strong to the downside. By the way, guys, the link to Elite Traders has been put in the chat. If anyone wants to join the Discord, now is the time to do it. We've also got a Black Friday sale on that's ending very, very soon. So if you want to come and get some signals and education and things, feel free to do that. Thoughts on silver and dollar CAD? Yeah, we'll have a look at silver. I'm not really too sure what's going on in the silver market at the moment. It's not really something I keep up to date with too often. Although I'm not sure I'd really like to be a buyer in the metals market, really, gold or silver. I think with a lot of the factors driving up precious metals this year are coming to an end. I know we've had some situation in the Middle East along with Russia, Ukraine starting to escalate a little bit, but it's clearly not it's clearly not reflecting on the markets, really. You know, it's not a huge catalyst to start buying precious metals from. So it's more, you know, there's nothing really to do here. I guess you could buy support, but obviously, you know, it's not the way I trade. But yeah, I think further downside for metals, in my opinion. So let's have a look at dollar CAD. Oh, we just had a look at dollar CAD actually. So yeah, essentially just waiting for a retest of this previous structure through here, and then looking for continuation to the next highs. I'll have a look at Bitcoin in a second as well. What would happen if they cut rates by 25 or if they hold? 25 basis point cuts would likely drive a little bit of bearish momentum, although as far as I'm aware, a 25 basis point cut is already priced in. So for example, when we had all of the bad data for the US dollar, we were in the process of pricing in a 50 basis point cut. It wasn't a secret, you know, I think it was like a 95% chance of a 50 basis point cut or something along those lines. And we had it. And look at what happened. We had consolidation for 1, 2, 3, 4, 5, 6, almost a week of consolidation. So if we get 25 and 25 is priced in, I wouldn't expect much, maybe a slight dip, but nothing too tragic. If we get a hold, I view that as quite bullish. Yeah, in my opinion, we're still heading to 110. We've broken 107 and we seem to be holding quite well above 107. So the next real stopping point is 110. It's quite a nice round psychological level. You know, we've just retested sort of 107, like I said, and now coming back to the upside. So we'll see. Actually, let's have a look at what the expectations are here. This is the FedWatch tool. If it'll load. Here we go. So yeah, 43.8% probability that they hold, 56.2% probability they cut. So if we do see the cut, it's not going to be a shock. So relatively flat, in my opinion. Although I'm still on the side that they're going to hold. The data's been very supportive. Powell sounds quite hawkish, so there's no reason, in my opinion, that they would cut rates. I know that there's room to cut rates, but it doesn't always mean they will. So yeah, I'm quite happy to say that they likely won't, in my humble opinion. Actually, let me just check this stream schedule. So there's me. Okay, cool. So I'm with you guys for an hour. We've still got 40 minutes left. If there's questions, let me know. If not, then I can keep yapping about things. How high do you think the DXY can go? Pound dollar consolidation. We'll have a look at pound dollar in a minute. DXY in theory can go anywhere. 113, 110, 120, 150. If we maintain the data we're getting in terms of positive data for the dollar and a possible hold in December, I would say 110 relatively easily, then maybe 113. And if we get to 113, I'm going to take my foot off the gas, and I really need to see what happens at 113. This is a huge level of resistance. The dollar would be priced quite expensive, really. So yeah, that's kind of all I've got in terms of expectations for the dollar. I don't want to sit here and start planning for a year's time when obviously data changes and things happen in the world. But yeah, for the short term, or like the near term, 110 first, and then we'll see after that. Would it hurt the index? Would what hurt the index? Oh, if they cut 25? Well, the index reflects the price of the dollar. This is what this index is. So, take that as you will. Pound dollar. Let's have a look. It's not really, well, yeah, I guess actually it is consolidated on the H1. Let's see. So they've already seen the market gap fill here. I'm still bearish on pound dollar, on basically all the dollar assets. So pound dollar, euro dollar, New Zealand dollar. If you were looking to trade this, however, you'd really need to see a breakout of this range, to be honest. There's nothing really to do where it is. I'm actually just going to check how my positions are doing here. Might look to close soon. 261. It's not really worth it. So the drawdown on this account this morning was about $1,000. So today, break even really. 264. We'll wait. We'll let the profits grow a little bit more. I'll be honest, guys. I don't really have that much in terms of what's going on in the markets. It seems we're really just seeing the same things day after day. Dollar strength, euro weakness, pound weakness, but we're staying in very extended market prices. So you can see dollar knock here, currently at 11.1, broken out of the Bollinger Band, reaching a huge level of resistance here on the daily time frame, but we're not seeing any reaction. Same thing here on dollar CAD. I mean, it's not quite the same because obviously we had the tariffs on Canada, so it's a bit of a more of a economic reaction. Euro pound essentially just consolidating really, and euro dollar retested the Bollinger Band and is now heading back to the downside. So I feel really bad for any of the buyers in euro dollar at the moment. Actually, I don't. They should be paying attention. I don't feel bad for them. Australian dollar yen. Yeah. It's funny. For the past few months, I've been saying I see no issue in these yen pairs reaching back to their previous highs. And it doesn't really seem like that's going to happen anytime soon. So I might have to revise that a little bit. Since it's Thanksgiving, should I invest USD Tri because of turkey? Yeah, go full margin on USD try. Just buy it. Make sure there's make sure you can get out of that though. Do you get all your fundamentals from the Edge Finder? No, I don't. So Edge Finder for me is like it's a final confirmation. It's almost like a signal for me. But before I do that, I have to have my own analysis. So let me show you something really quick. Here, for example. So this is, actually, I should probably hide my things there. So this is euro dollar. This is a bit old now, so some of the data might be outdated, but I essentially make a full thesis on whatever it is I'm looking at. So if I'm saying the euro is weak, the dollar's strong, well, why is it weak? Why is the dollar strong? What's actually going on in those economies to make the market do what it's doing? So I'll build a thesis like this. If the thesis is super strong and it's a super clear trade like euro dollar is, I don't really care if it's on the Edge Finder or not, because I trust my own analysis. But if it's something more like Euro CAD, where I am bearish on the euro, but I'm not too sure what's going on with the Canadian dollar at this moment, but it's reading bearish on Edge Finder, I'll take the stab. I'll have a go, and we'll see how it goes. So I hope that answers the question. DXY to 108. Rowan, yeah, I don't see why not. Don't forget the Greece. He's making country puns now. Thoughts on New Zealand dollar yen? Bearish. Can we have a vid explaining this? It's very difficult to explain in a video because I've tried to make videos very similar to that before, and it always sounds like a sales pitch, because the information I get is primarily from bank reports, and the only place I get those from is from my own server. So we have the rights to take them and distribute them. So, I can say, okay, get all this information, but you have to be in my Discord. It doesn't sound good, and it's not something I really want to put on my channel, to be honest. Although maybe I should. Maybe I should sell myself a bit more. Thoughts on New Zealand dollar yen with rate cuts around the corner? Well, it seems like the Bank of Japan is going to hike rates, so that's another factor that you might want to start positioning long for yen. So we'll see. But yeah, the yen isn't something I'm super concerned with right now. It's kind of just like the ugly kid at school that sits on the sidelines. Oh man, there is no way you're gonna be making Asian puns. Sean, how long did you sit and think of that one? So let's see what's going on here. The indices, we've got gap fills, US 30 not quite filled the gap. NAS 100 has, German 30, German 40, 2 gaps. Interesting. Yeah, it's kind of a either sell or get out of the market, really, in terms of, well, actually not sell, but it's, you either got to be positioned already or there's nothing to do. Too long. I do that quite often. Someone will say something and I'm like, oh, I can think of a joke about that. And then it takes me 10 minutes. And by the time I thought of it, the conversation's moved on and I look like an idiot. On SP500 long from Edge Finder basis from 15-minute chart, yes, I was looking to go long on the S&P, not on small time frames, so it wouldn't be a day trade. I'm more looking towards going in for a swing here on the H4. So if we look at what's going on, we've got upwards trend creating higher lows, very simple. Moving average is bullish. We've just rejected this level of structure. I mean, I'll be honest, this level of structure is pretty bad. It's not great, but we did reject off it nonetheless. We've also got the fib here rejecting the 50% pullback. So, it does look good fundamentally. The problem is that we've got FOMC tonight, and we're still underneath this, all-time high resistance level. So I don't really want to buy into it right now. It was more just, it's more of a curiosity thing. Is it going to go higher from here? Is it not? We'll see. James, can you explain market gaps? Yes, the market gap essentially happens. Let me do it on, let's do euro dollar. So what happened was on Friday, on the market close, the price of Eurodollar to buy or to sell Eurodollar, obviously ignoring spreads, but the price of Eurodollar is 1.04176. So what happens normally when we get a market gap is something's happened. It could be news release, it could be something, anything really that would normally drive price, but obviously can't because the market's closed. So when we get the market open, the price corrects this or accounts for this. So then we open with a gap. But obviously there's not been any candles here, so the market goes from here to here instantaneously. So that's essentially what causes the gap. It's the difference between the price of the market closing and the price of the market opening. And again, it can be caused by lots of different things, normally by, again, a news release or something economic, geopolitical, whatever. That's all it is. But generally in the FX market, we will see these gaps get filled. And I say normally because it sometimes can take a long time to happen. Sometimes it can happen in the first few minutes or a few hours, few days, few weeks. You know, it's not something you should, well, take my word for. Obviously, you know, if you want to start trading market gaps, go and test it. But as far as I know, I think it's 80 to 90% chance of it getting filled within the first 24 hours. What's that pivot point called? This isn't public. This is something I made. It's basically just a bad version of this one. So this is my own, again, my own indicator that I made. But yeah, it gives me sell and buy signals and things. If you type in Golden Gates algo on Google, it should come up somewhere. But yeah, I don't really sell that anymore, to be honest. So let's see what's going on. Bitcoin. Someone said Bitcoin, and I completely forgot to go over it. Looks like we're going to get 100K, I would suggest. So we've had a little bit of a pullback, nothing major. And now we're coming back to the upside. We've got so far a bullish engulfing H4 candle. The main problem I see with Bitcoin at the moment is if we hit 100K, are we going to see a very aggressive dump to the downside? And the only reason I say that is because if you think about the amount of people that hold Bitcoin or trade Bitcoin and the amount of times over the past, whether it's months or years, that people have been saying Bitcoin to 100K, Bitcoin to 100K, blah, 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 blah. Are they going to start taking profits in masses at 100K? It wouldn't surprise me, but I'm not a crypto trader, so I'm not too sure. But yeah, that's the main concern. If you're looking at crypto right now, I wouldn't be buying it and I wouldn't be selling it. I'd be just waiting, really. Thank you, James. You've got a big idea. Well, if you talk about trading market gaps, it can work very, very well, actually. I know a few people that trade just market gaps, but they normally trade them in the stock market rather than the FX market. But yeah, there's potential there, I think. So let's see. Slightly pulling back Eurodollar, nothing too major there. Oh, I did see something interesting, actually. There was, I think it was Bank of America updated their targets on the S&P for the end of the year. So we've now got 6,666, and we've also got 7,000. I think 7,000 was from Bank of America, from what I remember. But they're the two end of 2025 targets at the moment. So need to keep those marked up. But yeah, I think we could maybe get a really nice position on the S&P into next year, or starting next year into the end of the year, and sort of hold it. Thoughts on gold? Gold seems like a sell to me. But it's not something I would sell. So let's see. Yeah, there's not really anything in terms of technicals, I think. Let's just check here. Well, actually, I guess the fib lines up really well. But overall, yeah, definitely wouldn't be buying gold. But it's not really in a great place to sell. So unfortunately, that's all I've got for you. The situation with gold in terms of what's driving it just isn't enough really to go either way, in my opinion. Well, actually, sorry, it's not enough to go in for buys, which leans me more towards sells. But again, there's no real catalyst to drive me into a sell position at the moment. What was your biggest win in your trading career? It was, in percentage wise, it was 11% on gold when Russia first went in for Ukraine. And I'll be honest, it wasn't planned in terms of the trade was planned, but it just so happened that Russia invaded Ukraine at that time as well. So it's just a very, very well timed trade, or a very lucky trade, if you will. But yeah, I made a decent amount from that, but it wasn't anything mind blowing. Thoughts on GU? More bearish on GU, to be honest. I am still sticking with my dollar bullish idea. DXY to drop to 106. Yeah, it's possible. It's not, when I say excuse me, when I say I'm bullish on the dollar, I don't mean I'm expecting it to just rally up to 113 overnight. What I mean is the overall trend on the dollar, or the overall direction, is to the upside. If we see pullbacks to 106, 105, etc., fine, whatever. But we've also got to remember what's going on with the dollar. I mean, look at actually, I think I need to update this, but the fundamental, the fundamental map I've got here, it's all very bullish. There's nothing that raises any red flags or makes me concerned about the dollar at all, really. So yeah, in my view, it's just maintaining that bullish idea. Is Trump stopping Russia-Ukraine? Joven, if I could tell you that, I would already be in shorts on gold, but don't know. This is the thing that I'm a little bit conflicted about. I think I had a conversation with Nick about this not too long ago, because I asked him what he thinks of gold after the Trump win. But anyway, the point I'm trying to make is that if you look at what Trump was saying when he left the White House, and when Russia did invade Ukraine, and when we saw the Middle East and things, Trump's comments were basically that it wouldn't have happened under his presidential reign, if you will. So whether he'll put an end to it, I don't know. Whether he can calm it all down, I don't know. It's possible, but it's not something I'm going to trade on, because it's a bit of a coin flip on whether he will or won't. I'm not sure if that actually made much sense. It did in my head, so hopefully it did for you too. Also, this is a bit of a side note, but I found this morning. So this is called FX Blue. And let me just say, there's no affiliate here or anything like that. It's free. It's just something I found. But essentially, it's like my FX book, but it's so much better. So essentially, you can get a full list of everything you trade. It's so much more detailed. Now, I just want to address this peak drawdown, because it's horrible. It says minus 80. And trust me, if I had an 80% drawdown, I'd be out of the markets. But it's not actually 80. I don't know why it says that. It's actually 9. But yeah, it's quite cool to see a full breakdown, like completely for free. Because normally with a lot of the softwares and things that you can track your stats in a detailed way, it normally costs money. I don't want to pay money to see my own trading stats. Quite frugal. They have a good copy trade for MT5. Yeah, I've heard about that. But yeah, I do copy trading, but not for my personal accounts. But yeah, Eurocad buy. Well, if you're buying, you're going against me. So I'm currently short. Granted, I'm in drawdown, so maybe your idea would work better. But the thing I've got for Eurocad, why would you want to buy it, is what I'd like to ask. What is it that's happened in this market that makes you want to buy it? If you can tell me that, then I'll reply with why I am short. By the way, this isn't a gotcha moment. I'm not trying to call you out or anything. I'm curious. Because obviously we all see different things in the market. We all interpret things differently. So do you think FOMC will affect the dollar today? It could. It couldn't. I don't know. Depends what's said. If Powell comes out super dovish, then yeah, of course. If he comes out super, super hawkish, then yeah. But there's unfortunately no way to really know until it happens. USD CAD buy. I'm looking for a retest on the 149 area to make a lower high and form a short there. And short from there. Wait, so do you want to buy or sell? I'm confused now. Anyway, I'll cut you some slack. So the reason I'm in short is because I'm going to say this again. I'm sorry for anyone that's been here since the start, but there is nothing for the euro. I can't find a single redeeming thing that's substantial for the euro. We've got rate cuts. We've got overall general day-to-day data is very poor. The euro index is down significantly. So, you know, already to me, that signals sell euro. We've got the Canadian dollar, which is more of a proxy just to short euro. I'll be quite honest. The Canadian dollar isn't anything that I'm super happy with. The only concern I've really got, well, actually two concerns, I guess, is firstly the tariffs, which is what drove this initial move to the upside. And secondly is oil prices. If oil obviously continues to go down, we'll continue to see a weak Canadian dollar. Although I don't think this trade is long-term enough to really be affected by that too much. But that is something to keep in mind. Okay, so you do want to buy. Fair enough. All I will tell you is I trade fundamentals. If you trade technicals, that's completely fine. But I make the most of my money from trading fundamentals. So follow your technical plan. Again, if it makes you money, then do what you think is right. I'm long silver. Yeah, I mean, as I was saying earlier, the metals market to me just doesn't look appealing. Silver, gold, even copper, it's just not anything that I really want to touch right now. What time frame do you use for entries? It really varies, Jules. It's a mix of, 15-minute, 30-minute, hourly, 4-hour, daily. It depends. I've got a few different strategies I use for different market conditions. So, yeah. Like here, on this one, for example, this is my sort of intraday strategy. So I'll enter on the 15 minutes and I'll use the H1 to sort of monitor it and make sure that I'm buying at a decent price. This is swing trading. So normally I'll enter off the 4 hours and use the 1 hour just to, make sure, again, I've got a good entry on there. How long do you think you'll hold for? It depends. If you're talking about Euro CAD, I'm probably going to close that one, but when it gets back to entry, to be quite honest with you, just to sort of get out of that market. Really, I'm up very, very well for this month, so I'm quite happy to basically call it a day. Really. New Zealand CAD, yeah, we can have a look at that one. Thomas, yo, bro, FOMC speech or only paper release today? If you mean, are we getting a rate cut? We're not getting rate cuts today. It's just, oh, sorry. Do you mean speech or, okay, never mind. I misinterpreted what you said. I'm actually not sure. Let me check. I'll have to go to trading economics. Calendar. FOMC here. Yeah, I'm not actually sure. I'm sure Nick will tell you. Yeah, I'm not 100% certain, to be quite honest with you. What MAs do you use? I use the 50 and the 200. So we'll do New Zealand CAD. Actually, very similar to EuroCAD, really. I mean, the overall trend is basically non-existent, to be quite honest with you. Well, the thing is, I'm not really very certain on the New Zealand dollar. It's not something I'd really want to buy. And the Canadian dollar, again, it's not really something I'd want to buy. So this market to me just doesn't seem appealing. The technicals look quite good. We've got a nice little trend line here. A 200 daily moving average is still, potential resistance. There's nothing really there. I'll be quite honest, or nothing I see really. EF is bullish on New Zealand CAD. Is it? Let me have a look. No, it's not. Yeah, no, New Zealand CAD's not here. Yeah, no, it's definitely not. Oh, bearish. Okay. Oh, you're right. Actually, sorry, I completely missed that. It is bearish. But yeah, still for a trade on the edge finder, it also has to align with my own biases and opinions and research. And it's at the moment New Zealand CAD just doesn't really fit what I'm looking to do. At the moment, I'm completely and totally revolving around the dollar and the euro. And obviously, New Zealand CAD doesn't really play into that narrative. James, Trump officially sit on his chair in January. What's going to be markets? Your idea, special DXY? I don't know. I would like to say it's going to be, the year of the dollar. But if you look back in 2016, we had the initial move to the upside, which we're currently in, really, right after the election, then followed by a huge sell-off in the dollar. It was, 14.25%. So I'm just a bit cautious on, are we going to get the same thing where we're having, obviously, the election was here, having that run to the upside. Are we going to get a huge sell-off afterwards? I don't know. Unfortunately, can't predict that. As for what's, good trades for next year, it's a good question, really. I've not thought about it, to be quite honest. I've been very busy. Yeah. Ask me in December about next year's trades, and I'll be able to give you a bit more of a insight to that. But right now, I don't really have anything worth talking about. EuroCAD sell, yes, indeed, for me it is anyway. S&P at 6K, is it? You know what's funny? I might be looking back in a couple of weeks at this entry that I didn't take and say, oh my God, I can't believe I didn't take it. Because if we rally through these highs and start creating higher lows and higher highs and keep making new all-time highs, I'm going to be really, really salty that I didn't take it. But of course, you've got to trade your plan, and it just isn't in my plan right now. But trust me, the amount of times where I've sat out of a market because there's just something not quite right, and then it does exactly what I thought it would do, I probably would have 100x'd my money, but there you go. What can you do? Currently long CAD Swiss. Let's have a look. So let's just check. Yeah, okay. Oh, that's funny. This was a trade I was looking at yesterday on stream with someone. It's a good thing I didn't take that. So let's see. What did you say? CAD Swiss 0.629, and your profit target 0.6445. This looks actually like quite a good trade. We just bounced. Well, yeah, I get, we've just sort of rejected this 200 moving average. RSI was oversold. Momentum is clearly to the upside at the moment. The trend is non-existent. But yeah, I can see it working out. I think gold is going bearish. MA, you and me both. Currently long USD CAD. Good stuff. I think USD CAD is a good buy position to have, especially, with oil prices potentially going lower. It's just been quite a volatile market today, really. Well, when I say today, it was only this one candle, I guess, but I'm looking to go long as well. So it'd be a case of waiting for a retest of this level and then getting in to go long. And then once we get to that position, I will here. Once we get, or if we get to these highs, I'll start shorting there. and see how that one goes. We're already very extended in a lot of the FX markets at the moment. It's been quite a good Christmas gift, actually, or early Christmas gift. I'll keep it in mind. Ask on the 31st of December. Yeah, I need to work out what the A1 stream schedule is like over Christmas, actually. Yeah, interesting. Okay. I appreciate the insight. No problem. Cool. Good stuff. Seems like we're getting through quite a lot of charts today. So let me see what's going on here. So we've got FOMC in, when is it? 7 p.m. So in about just over 2 hours, we've got FOMC. So we'll see. Have you guys got any trades on as we go into FOMC? Rowan, good stuff. I'll see you later. Have a good rest of the week. You see NASDAQ drop to 28 or 20.8. Let's have a look. Yeah. I mean, it's previous support almost somewhere here. Yeah, I think that's decent. Last day of bull as war, GDP, inflation, FOMC awaited. Yeah, maybe. How do you have more than one chart open? If you mean like this, then you need a subscription to TradingView. Or if you mean the tabs, you can just click the plus here and you can, create a new layout and open new charts and things from there. Do you think Euro will hit parity this year? Probably not this year. If we are going to parity, I think it will happen possibly Q1 2025. And the reason it would be Q1 is because that's when we get Trump in, on his throne, really. So if we're going to see a huge dollar bull movement, enough to push down to parity, it will likely be then. Yeah, the first one. So if you have a membership, you can go up here on your layout and you can, just have one chart, or you can have up to 16 charts, but I have it on 3 for this one. I think it's possible for a big move in December. Well, this is something I was looking at, actually, because I've been doing a lot of looking into euro dollar, obviously, because I'm very involved in that market at the moment. If we look at seasonality here, so let's have a look at euro. That isn't what I was looking for. Oh no, it was. So yeah, we typically see a rise in the euro towards the end of the year, and the opposite with the dollar. So we normally see a bearish dollar and a bullish euro, and that normally starts taking place at the start of December until the end of December. So seasonality is completely the opposite of what I want on euro dollar. I mean, the seasonality, it's not a huge factor, really. Obviously, seasonality it's just historical data. It doesn't account for what's currently moving markets. But it's still something I would like to account for. In Euro CAD shorts, 1% up. Jovan, that's great. Hi, James. Possible support on GJ. Let's see. I'm going to be honest, I don't see anything on here, especially anything that would be worthy of going long. I mean, the weekly is very bearish. The daily has a lot of bearish momentum. We've just broken below this 200 daily moving average. The H4 is bearish. We're following a downwards trend line. We've created a lower high. Technically, everything that I look for signals a sell, along with, again, the potential intervention coming on the yen. Definitely not a market I'd be looking to buy right now. Did he go over New Zealand dollar already? Yes, I did. We're currently in shorts on New Zealand dollar. This is the position. I'm in USD CAD, worried about the FOMC news. And when, if you're worried, move stops to break even or get out of the trade. I understand I use these conditions when filtering out trades. Good stuff. Sean, if you're short GJ, I'm a bit jealous actually, because I've been talking about going short on GJ for weeks. I just didn't pull the trigger. And again, this is very similar to what I was just talking about, actually. It's one of those moments where it didn't actually fit my plan, but now I'm kicking myself saying, maybe I should have broken the plan. But obviously I don't. But yeah, I had some very light fundamental or economical analysis to start suggesting possibly going short, and I didn't do it. But there you go. What can you do? Unfortunately, not much. Can't unwind the charts or rewind the charts. Do I know when New Zealand rate decision is? Yes, I do. Give me 1 second. I don't have it on the top of my head. Let me just pull it up. Oh, this is so slow. New Zealand is not loading right now. It's a bit of a pain. Sorry for the wait. So can't see. I don't know why it's not loading. Sorry, guys. Yeah, can't tell you. No idea. I don't have it off the top of my head, unfortunately. This is actually one of the problems that I've found now. I use so many softwares and websites and things for my data, my analysis and things like the Edge Finder. I don't have to keep it on me anymore. So I used to have a notebook. Actually, I'll show you. I used to have this notebook right here. Yeah, here. So I used to write down all like the central bank rates and trade ideas and all sorts of stuff. And because I don't need to do that anymore, I don't have anything on hand. And I'll get asked questions like, shit, I don't actually know off the top of my head. A trader should know. James, since you're a fundamentalist with Kiwi, wanting to cut rates, can we expect weaker New Zealand dollar to the end of the year, possibly? Yes, I would suggest so. New Zealand rate decision 6 after FOMC minutes. 6 hours after FOMC. Okay, fair enough. Thank you. Follow the trend. Someone's here. Oh, it's James. Hello, James.
Hello, James. How are you?
I'm good, thanks, James. How are you?
I'm doing pretty good. I want to thank you for helping out today. I know that you've been going for a while, and I know that there's not always a ton of stuff to talk about, so I figured I'd pop in here a little bit early and go ahead and let you go.
Sure. Okay. Cool. All right. Well,
guys, we're going to drop. We actually did drop James's YouTube in the chat. Maybe we can do that one more time because there's a few more comments and stuff coming in. Yeah, guys, if you enjoyed James's segment today, make sure to go subscribe to him. You can also check out his stuff over at Elite Traders. He has his own trading community as well, but we're happy to have him a part of the A1 community as well. James, yeah, thank you for coming on again today.
Cool. Thanks, James. See you later, guys. Have a good day.
James and James together again. It's not often that James and James hop on stream at the same time, but when it does, it's always a good time. All right, guys. We have worked out all of the kinks. We've gotten more detailed when it comes to this. We are going to do another giveaway, which means that we are going to do more trading trivia. Who's excited for some trading trivia? Let me see in the chat. We got 360 people watching right now. We've been doing a lot of giveaways over the past 2 weeks, 3 weeks. This is our third time doing this in the past couple of weeks. Trading trivia. Max B is a regular I've seen. I think that Max B got on the wheel one time. Sonny is excited. Mo's excited. Follow the trend. We are going to do some trading trivia here for a chance to win either the Edge Finder or the Stock Box. Your choice. You can have one or the other. You cannot have both, but you can have one or the other. Edge Finder or the stock box. And I'm going to go over the rules really quickly as people kind of get their trivia minds ready. Here are the rules. Trivia rules. Like I mentioned a minute ago, we have changed our rules. Last time I did something, admittedly, probably not the best idea, to just have you go A, B, C, or D. That ended up in a lot of spamming from the chat. So this time, for you to get the answer correct, pay close attention, people. Type out the entire answer. If it's a longer answer and you only put the partial answer, I'm not going to count it. I want the entire answer. All of these are multiple choice, by the way, just in case. So I do have 4 options for every question. If you know it off the top of your head before I even finish reading the question, then you get a little bit of a head start if you can type it out fully. You do not have to include the A, the B, the C, or the D. Okay? I want the answer, but if they're marked A, B, C, D, you don't have to include the letter that goes along with it. You don't have to put, A, Edge Finder, whatever. You get what I'm saying? Just the answer. Lastly, you only get your name on the wheel one time. Only get your name on the wheel one time. And as a special little bonus, this is going to be good for some people, bad for other people. I added 2 extra questions today. So we had been doing 10. We're going to do 12 today. So 2 more people are going to get their chance to put their name out, to put their name on the wheel. So type out the entire answer. You do not have to include the letter correlated, associated with whatever the correct answer is. You just have to type the answer. And you only get your name on the wheel one time. It's going to be 12 questions. Oh, and this is the most important part that people always seem to forget. I have the chat right in front of me. I see H Ball Out. I see Follow the Trend. I see Jovan. I've got the chat in front of me. Whoever I see on my end come in first, type out the full answer first. That is who I go off of to get their name on the wheel. But they'll only get their name on there once. So if we have somebody who's just a super genius, super quick with it, don't worry. They'll only get their name up once. Okay? All right, we're going to get started here in just a second. Before we do that, though, let me know really quickly, if you do win, are you picking the Edge Finder or are you picking the stock box? The first time we did this, it was completely one-sided. Everybody wanted the Edge Finder. Last time we did this, it was a lot more 50-50. I saw a lot of Edge Finder. I saw a lot of stock box. I see some Edge Finder, some stock box. I see mostly Edge Finder. The stock box is really, really pretty cool, guys. I know that most of our audience is Forex traders, but if you have the time, check out the stock box. There's some really cool features on there that aren't included in the Edge Finder, like the 13F scanner where you can track what hedge funds, the biggest hedge funds around the world, what they're buying and selling on a quarterly basis. Stock box is a pretty cool tool. Okay, I see some stock boxes in there. Can you give more info on the stock box? I can. And you know what? Because you asked that so nicely, can you give a description of both? Okay, well, perfect. For the people that do know, I'll do this really quickly, I promise, and then we'll get to the trivia. I'll just do this really quickly. Really, really quickly. and then we'll get to trivia. Don't worry. So here is the Edge Finder. Am I sharing this? Yep. Okay. The Edge Finder is kind of like our marquee tool here at A1 Trading, developed by Trader Nick, Frank, and some other really smart people. And these are all of the assets that we're tracking in the Edge Finder. They're getting scored on 13 different metrics here. It's getting updated every single day. It's constantly looking for new data to come in. As new COT data is released, as new GDP numbers are released, those numbers automatically get plugged into an algorithm based on whether or not they went up, whether or not they went down, what it came out to compared to the forecasted. You know, if GDP is forecasted to come out at 0.2%, but it came out at 0.5%, you know, how does that affect a currency, an indice, crypto? We have gold here. We have Bitcoin here, copper, as well as all of these currency pairs. It's tracking all of this stuff in an algorithm and scoring these, and it's changing on a daily basis. Right now, we don't have a ton of setups, but that's also, you know, one of the nice things about the Edge Finder is it's going to keep itself honest. It's not going to tell you something is bullish or bearish if the Edge Finder's algorithm doesn't truly believe that it is. So here's our current top setup list. And we have so many tabs of data here in the Edge Finder. These are all of our data scanners. So you can check out all of the data all in one place. If you want to get really detailed with it and you can break it down further, we're looking at COT data right here. We've got COT data getting updated every single week right here. Latest weekly COT filing. And one of our newest tabs, COT data history, that actually goes back nearly 2 years tracking COT data for all of these different assets. Same thing with retail sentiment. We've got more tabs here for sentiment. We've got our seasonality tabs, all of our fundamental data tabs. So much information all in one place. Non-farm payroll, GDP growth, our market heat map, economic calendar. Tons and tons of useful stuff here, right? That's the Edge Finder. Here is the stock box. We can take a look at the top stocks from all over the world. It's good. It's getting scored pretty similar to the Edge Finder, although we have not as many metrics that we're scoring here. We're scoring based off financials. What do the earnings reports look like? The trend score, you know, what does the actual chart look like? Our 13F score, whether or not hedge funds are adding or selling these stocks into their portfolios. And an insider score is when that information is made available, whether or not CEOs or other big, you know, big players in the company, if they are buying or selling their own company stock, that is something that we want to look out for too. But not just stocks, we also have sectors and ETFs. So we got, you know, real estate sector, we've got gold sector, utilities, healthcare, semiconductors, energy, things like that. How does all of this fundamental data, how does the forecasted data and the actual data, you know, what it came out to, how does that affect all of these different things here? You can see we're scoring on GDP, manufacturing, PMI, services, PMI, retail sales, CPI, employment change, unemployment rate, and interest rates. And you'll notice that not all the numbers are the same. You know, interest rates in the US come out as one number, but they affect different sectors of the market differently. Interest rates have more of an effect on the tech market than they do on healthcare, you know, things like that. 13F portfolio tracker is something I mentioned. This is where we're tracking all of these different hedge funds from all around the world. Right now, I have Berkshire Hathaway, Warren Buffett, maybe you heard of him. This is his hedge fund. We can see what he's buying and selling. Right now, he owns more Apple shares than anything else in his portfolio. Although from quarter one to quarter two, we saw him sell a lot of his Apple stock. BAC, I don't know what BAC. Oh, wait a minute. I just realized, guys, I'm so sorry. Oh, man. All right. So I'm not going to say all that again. I'm just going to show you. Here's the top stocks. Top stocks with the financial score, the trend score, the 13F, and the insider score. Guys, I am sorry about that. Here's our top sectors. We have all of our sectors here: tech, gold, utilities, healthcare, energy. You can see how we're scoring it here. The fundamental data. The 13F portfolio tracker is what I was just talking about. We're looking at Berkshire Hathaway. That's Warren Buffett's. He owns more Apple than anything else. From Q1 to Q2, he sold a bunch of Apple. BAC, I'm not sure what that is, but he's added it to his portfolio a little bit more. So there we go. That was almost a really good sales pitch of the stock box. Except you couldn't see it for like the entire time that I was talking about it. But yeah, top stocks, top sectors, and we have even more tabs here. And similar to the Edge Finder, didn't mess it up that time. I'm showing the Edge Finder now. Once you get the stock box, you own it for life. So any updates that we make to it, you will get updated free of charge. For example, if you already own the Edge Finder, you know that within the past couple of weeks, you've gotten the brand new COT data history tab, as well as the brand new retail sentiment history tab. We already had retail sentiment available in the Edge Finder. Now we have historical retail sentiment to go along with that as well. Similar to the COT data, both of those brand new just in the last couple of weeks here in the Edge Finder. Totally free update. And as we go along and improve the stock box as well, all of those updates come free of charge. But there's a lot more that we already have in the stock box as well. With that sales pitch out of the way, those are your two prizes. You get your choice of Edge Finder or stock box with the trivia that we are about to play. No, Edge Finder does not have a subscription. Edge Finder is a one-time price. Same with the stock box. You buy it one time, you get it for life. So you win the Edge Finder, it's permanent. Yes. Yes. If you win, we're giving you access. You get it, it's yours. Congratulations. If you don't win and you like these tools, if you like these trading tools that you see, Forex James, who was just on the stream, he is an avid Edge Finder user. Trader Nick, who hosts the show, who you guys always come here to see, he is an avid Edge Finder user, as well as Stockbox. If you don't win, the Edge Finder and the stock box, as well as everything else that we sell at A1 Trading, right now is 40% off. 40% off all of our stuff because of our Black Friday sale. You can message a team member with the link that we can drop in the chat here or in the description down below. We have live people in office right now that you can talk to. In fact, you see me? Do you see me winking at the camera? This might come in handy later. I'm winking at the camera. You can talk to Hallie. You can talk to Emily. You can talk to Drew. Hallie, Emily, and Drew are available in office right now for you to talk to with this link about our 40% discount sale that we're doing on the Edge Finder that I just showed off, the stock box that I just showed off, as well as our Discord services. And we also have TradingView indicators. We do it all. What can I say? All right. Now let's do some trivia. Now let's get into some trivia. Enough sales pitch. You guys want to see if you are the winner of the Edge Finder or the stock box for free. If you're not, 40% off, still happening. Limited time offer. Ends at the end of this week. Don't miss out. Okay. Are we ready for question number one? Remember, type out the entire answer. You do not have to include the letter, either A, B, C, or D. Don't have to include the letter. Just type out the entire answer. You only get your name on the wheel one time. I have the chat right here in front of me. I'm looking at the chat. Whoever I see come in first with the correct answer, your name is getting up on the wheel. We are doing the digital wheel again, not the real wheel, unfortunately. I have real wheel in the corner, but it's so much easier to do digital wheel. And also, we bought a wheel that you're supposed to like write with dry erase marker and it'll erase, and it doesn't erase. It doesn't. It is the most ridiculous forearm workout you've ever seen trying to erase that thing on that wheel. It's like impossible. So we're doing digital wheel again. All right. Question number 1. And I'll tell you this too. I have a little bit of stock trivia. I have a little bit, I think just like 2 questions of just general world trivia. And then it goes to Forex trivia. And then I have one final bonus question. Question number 12 is a bonus question. Wink, wink. For all of you that picked up on that. Okay. Question number 1 is going to be a stock question. And it is, which stock market index tracks the 30 largest publicly traded companies in the United States? Is it the Dow Jones Industrial Average? Is it the NASDAQ? Is it the SPY? Or is it QQQ? I see answers coming in. I see answers coming in. Somebody was really quick with it. Most of you guys got that right. Most of you guys got that right. I see somebody put a letter. Remember, I'm asking for the entire answer. I'm asking for the entire answer, which means if all you wrote was the Dow, that was not the entire answer. Dow Jones Industrial Average is the full name. That's what I was looking for. And the first person to type out Dow Jones Industrial Average, like I said very specifically in the rules, was Pixel Wins. Congratulations, Pixel. You are getting your name up on the wheel. Congratulations to you. Remember, the entire answer, not all of them will be this long. This was kind of a long one to type out. I know, they're not all going to be this long. And you don't have to put A, B, C, or D. Why is there a picture of a cat, you may ask? Because when I typed in Dow Jones Industrial Average into the software that I was making this little presentation with, this popped up. And so I added it. I don't know. All right. Question number 2. Question number 2. Which company became the first to reach a market capitalization of $1 trillion in 2018? And I added the tickers. You don't have to put the tickers. I just want the name of the company. Was it A, Microsoft, B, Tesla, C, Nvidia, or D, Apple? Just give me the name of the company. That is sufficient. The name of the company, either A, was it Microsoft, B, Tesla, C, Nvidia, or D, Apple. I added the tickers because I thought it looked more stocky that way. In case by some strange, bizarre something, you happen to know them by their tickers and not the actual company. I'll tell you what, I'll take either. What's funny is the person that was complaining that they got it first last time when they didn't. Congratulations, you got it first this time. The correct answer is, in fact, Apple. Apple was the first company to hit $1 trillion in market cap. They did so in 2018. Now, listen to me very closely because I'm gonna give you a little bit of a. Oh, I should put the answer down or the winner down. The winner was you, USLUP543. Congratulations, USLUP543. Congratulations. You got it right. You were the quickest. Okay. Because I know that this could have been slightly confusing that I said put the full answer, but then I'm like, you only need the company. This next question, listen to me very carefully. This next question is going to look very, very similar. You don't need to put the stock ticker. You only need to put the company name. You can't just put A, B, C, or D. Just put the company name. Just the company name. That's all I'm looking for. All right. Question number 3. Again, I need the full company name, but not the stock ticker, just the full company name. Which company became the first to reach a market capitalization of $2 trillion? Was it A, Microsoft, B, Tesla, C, Nvidia, or D, Apple? Apple was the first to $1 trillion. Were they the first to $2 trillion? Or did somebody else beat them to it? Nvidia has been growing pretty quickly. Tesla at one point was the stock market king. Microsoft has always been right there behind Apple. Did they finally beat them out? Or am I tricking all of you? And Apple was the quickest to $1 trillion and $2 trillion as well. Let's find out. Let's see. All right, I have the winner. I have the person that got it first. The correct answer is, in fact, it was Apple again. A little bit of a trick question there, but it was Apple both times. And in fact, there are only 3 companies in the world right now that have a market cap of $3 trillion. Apple is one of them. There are 2 others. The winner, by the way, again, on my end, I can only go off of what I can see on my own computer. I'm looking at the chat right in front of me. The first person to type out Apple was Kim. Congratulations, Kim. You are getting your name on the wheel. Congratulations, Kim. All right. Question number 4. And I think our last stock question. There might be one more after this, although I think this is the last one. Also, I should mention, if you get your name up on the wheel, stay to the end of the stream, the end of this segment when I actually spin the wheel, because if you're not here to let me know in the chat that you are ready and available to claim your prize, then I'll spin it again and we'll get somebody who is ready and available to claim their prize. We had that happen last time. Somebody won and did not let us know that they were still hanging out in the chat to send us an email, and we gave their Edge Finder to somebody else. All right. question number 4, I think, maybe 5. I think it's 4. Question 4, which of these companies is worth more than 3 trillion in market cap? I mentioned that there were only 3 companies in the world that are worth more than 3 trillion. I said that Apple was one of them. What is one of the other 2? Is it Alphabet? That company owns Google, by the way. Is it Tesla? Is it Amazon? Or is it Nvidia? Apple is one of them. I can tell you, I'm pretty sure another one is Microsoft. I think the other one is Microsoft, Apple and Microsoft. That's why I did not include Microsoft in this, because the third one is either Alphabet, Tesla, Nvidia, or Amazon. I'm going to look at All right. I've scrolled to the top. I see the winner. This guy has made it on the wheel before, if I am correct in thinking that, but has not won before, if I'm also correct in thinking that. Maybe he has. I don't know. Maybe he has. I don't think he has. Anyway, correct answer is Nvidia. Isn't that crazy? Isn't that crazy? Just the absolute astronomical rise that Nvidia had in the market space, along with other tech giants like Apple and Microsoft that have been here for much longer and do much more, frankly, than Nvidia does. Nvidia was able to rise that quickly in the ranks and is now worth over $3 trillion in market cap space. Crazy. The winner on my side of the screen, a lot of you got this right very quickly, by the way. A lot of you got this right very quickly, but the first person to type it out on my side of the screen is Max B. Congratulations, Max. You get your name up on the wheel. Max B. Max B. A lot of you put Nvidia very quickly. A lot of you put Nvidia very quickly, but I can only go off of what I can see. In fact, just to show you guys that I'm not messing around, I'm going to do something here that is super unnecessary. But I like you guys, and I want you guys to trust me. So I'm going to do something really quickly. Because I want you guys to trust me that I'm not messing with y'all. So if I do this and then I do this, I got to make sure that I'm hiding the okay. So if I do this and then this, I think that's good. I think that's fine. Okay. I think that's fine. And if I do this, and then I do this, and then I do this, and then I share like that, and then Chandler, can you throw my screen up on the stream because I'm only showing half of it? Thank you. So here's half of what I see here. But as you can see, I promise you, I'm not messing with y'all. I said Kim was the winner. First person I see, Max B, said Nvidia. A lot of people said Nvidia. But I can only go off of what I see. Right? Here's y'all talking about the last question. And then all of you, boom, 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 NVIDIA. Max B was the quickest. And I don't mean to say that to I just want you guys to trust me. That's all. I promise I'm going off of who I see first, and that's all I can do. Anyway, back to the game. Let's go back to the game here. Let me present this. You just got to trust me. I'm not cheating anybody. All right. Question number that I did add Max to the wheel. Yes, I did. Okay. That was question number 4. On to question number 5. Question number 5. What year did the UK officially leave the European Union? Brexit. What year did Brexit occur? We are into our world trivia. Basic world trivia. I know that this was a big deal. UK leaving the European Union. We probably have some UK watchers right now. Probably have a lot of European watchers as well. We are over here in the United States, in case you can't tell by my boring, basic American accent. What year did the UK officially leave the European Union? The correct answer, 2020. 2020. The first person that I saw say 2020, a lot of you guys got it wrong. And I double checked this one because I had Chat GPT help me come up with a lot of these questions. But I'm pretty sure I double checked this one. Correct answer was 2020. Tom 8. Tom 8 is getting his name up on the wheel. Tom 8. Congratulations, Tom. You've gotten your name up on the wheel. It happened officially. Brexit officially took place on January 31st, 2020. January 31st, 2020. Just did my own little double check because so many people put the incorrect answer first that I was second guessing myself because I figured you guys probably knew better than I did. All right. We have one more general world trivia question before we are on to Forex. Forex trivia. Tom 8, your name is on the wheel. One more world trivia question. Here we go. Get ready. In 2020, the Summer Olympics were supposed to be, the 2020 Summer Olympics were postponed to 2021, and this country was the host. This country was supposed to host in 2020. They instead hosted in 2021. So it's the same country. There wasn't a shift or a change there. But essentially, what company hosted the last Summer Olympics? We just had the Summer Olympics in one of these countries listed. We just had the Summer Olympics in one of these countries listed, so it can't be that one. What country hosted the last Summer Olympics? Follow the trend seems very confident. Let me scroll to the top. There was someone else who was very confident along there with you. And I see, let me show the correct answer. The correct answer was in fact Japan. Japan is I would say Japan is a bucket list destination for myself. I've been to a few places. I have been to France. I have been to Austria. I have been to Italy. I've been on a cruise that took me a couple places in Mexico. I've been to Jamaica, but I would really like to go to Japan. I do not want to deal with the flight over to Japan. That sounds terrible. But you guys don't care about that. You want to know who the winner was. And on my end, I have Jovan. Jovan with that is a NBA 2K player. I can only assume from like one of the early games. It looks like he's wearing a Brooklyn Nets jersey because he's got a white and black jersey on. But I have no idea. One, if that's correct, or two, if that is a Brooklyn Nets player from an early 2K basketball game. I have no idea who that's supposed to be. So please tell me who that's supposed to be. Jovan Sentinel. Congratulations. Your name is up on the wheel. And we are moving on. That's Curry? That's supposed to be Steph Curry from 2010? Bro. That's crazy. That's crazy. All right. All right, guys. We are halfway through. We're only halfway through. So if you haven't gotten your name up on the board yet, we're only halfway through. So don't worry. And we are about to move on to Forex trivia. I'm pretty sure. We're going to the next question in 3, 2, 1. What currency abbreviation is ZAR? Is it the Turkish lira? Is it the Russian ruble? Is it the Zimbabwean dollar? Or is it the South African rand? ZAR is a fairly well-known currency, I would say. Fairly well traded. I know that we have USD ZAR listed in the Edge Finder. So are we looking at the Turkish lira, the Russian ruble, the Zimbabwean dollar, or the South African rand? ZAR. ZAR. Scrolling to the top. Scrolling to the top. First person that I saw type it out correctly. Correct answer being, of course, the South African rand. First person I see type it out correctly is GNU. GNU is going up on the board. Congratulations to GNU. I threw Zimbabwean dollar to try and throw y'all off because ZAR, what does ZAR have to do with South African rand? And Zimbabwe at least starts with a Z. However, it did not throw enough of you off. Gene, you didn't spell it right, though. Because he accidentally typed one extra letter. He said South African rand. He just accidentally put an A on the bottom of South because his fingers are that fast. His fingers are that fast. Oh, we're definitely giving that to him. I don't care if he accidentally typed A. That is not wrong. He typed South African Rand in its entirety. He accidentally put an A at the end of South because he's typing so fast. Calm down, people. Calm down. Guys, calm down. All right. If somebody gets 2 right, doesn't matter. Once your name is up on the wheel, it goes up 1 time. It goes up 1 time. We don't need to spell it correctly. You need to definitely spell it close enough. If I look and I see that it's clearly the correct answer, then I'm going to give it to you. But they get removed double negative. That's funny. You guys are freaking out because he accidentally put an A at the end of South. Come on. Let's be serious here, people. Let's be serious and let's move on to the next question. We're almost through. We have, I think, 5 more questions to go, and then we're going to spin the wheel. So make sure if your name is on the wheel that you stick around so that you can actually claim your prize. 5 more questions to go. Forex question coming up, and it is, what is the most traded currency pair in the Forex market? Is it Euro Pound, Aussie Dollar, Euro Dollar, or Euro Yen? Which one is it? I think I may have done this question before, but we're doing it again. We're doing it again. A lot of Euro pairs on here. Euro Pound. Does Europe and the UK, do they got beef with each other? Euro Dollar. I don't know why I said that. Euro Yen. A lot of people trade Japanese pairs. Is it Aussie Dollar? Mysteriously up there for some reason. Wow. I think we know who's got the really fast internet up here. The answer, of course, Euro Dollar. And from my end, I see Jovan. Already got your name up on the wheel. Does not count. So the next fastest person was Uslup. Already got your name on the wheel. Does not count. So the next fastest person was, y'all are going to hate me for this, GNU. Already got your name up on the wheel. Does not count. The next person was Kaiser, one of the two, probably, FX. Congratulations to you, Kaiser FX. Kaiser FX, you've got your name up on the wheel. Congratulations to you. You're welcome. All right, guys. A few more questions to go. Here we go with the next one. What is the name of the central bank responsible for setting the interest rate and controlling the money supply in the Eurozone? Is it A, ECB, B, Fed, C, RBA, or D, BOE? This is like the longest question accompanied by the shortest answer. The longest question accompanied by the shortest answer. And the most important part of that is the very last word in the question being the Eurozone. Eurozone. The Fed, Federal Reserve, controls the United States interest rates. RBA, well, that stands for the Reserve Bank of Australia, controlling Australians' interest rates. BOE, how about the Bank of England, controlling the English UK interest rates, which means that ECB, the European Central Bank, controls the Eurozone's monetary policy. ECB was the correct answer. ECB was the correct answer. Congratulations to a lot of you put Fed. A lot of you guys put Fed. ECB. First person not already on the wheel to say ECB was Jason. Congratulations to Jason. The Eurozone, central banks. Got it. Oop, not ECB, dummy. Jason. Sorry, Jason. I wasn't calling you a dummy. I was calling myself a dummy. Yeah, most important part of that question. Most important part of that question was right here at the very end. I'm going to show the previous question right here at the very end. The Eurozone. ECB was the correct answer. All right. Just a few more questions to go. I think just 3 more questions to go. Next up, another Forex question, and it is, what is the term for the difference between the bid and the ask price in a currency pair? Is that the spread, the swap, the leverage, or the margin? Most of you, looking at the chat right now, most of you have gotten this question correct. A lot of you got it correct right off the bat. In fact, imagine the ECB wins an Edge Finder. Yep, everybody at the ECB gets one. The very first answer that came in on my side of the screen is correct. It is, in fact, what most of you said, which is spread. And Sparkles, congratulations. Your name came in first. I did it again. I just typed spread. Sparkles. Sparkles. I guess to be fair, Sparkles and spread are a little bit closer than Jason and ECB, but Sparkles, your name is up on the wheel. And we have 2 questions to go. 2 questions to go. Let's get right into it. Let's get right into it. What does NFP stand for? National Forex Price, Non-Farm Payroll, National Financial Policy Positions, or, oh gosh, dang it, I messed up, or New Forex Positions. It was National Finance Policy or New Forex Positions. I thought that looked a little weird at first. But most of you should know what NFP does in fact stand for. We do a big NFP stream once a month for, of course, non-farm payroll. Non-farm payroll. Scrolling to the top, the first person I see that typed out non-farm payroll, Revo. Congratulations to Revo. Revo's name is up on the wheel with just 1 more question to go. Non-farm payroll. I feel like I'm losing my voice right now. This is crazy. Excuse me, guys. I'm sorry. All right. One question to go. Once we finish up with this question, we're spinning the wheel. And this last question is, of course, what I was hinting at in the very beginning. Name one person you can talk to right now about our 40% off sale on the Edge Finder, the Stock Box, Pulver Alerts, and VIP Discord. I gave you all of their names at the very beginning, and I did a lot of really obvious winking and basically telling you that this was going to be one of the questions. I told you that this was going to be one of the questions at the very beginning of the trivia segment. Who was paying attention? Who remembers? Keep in mind, I said name one person. I just saw somebody named all three. I'm almost considering giving you extra credit for naming all three, but I did just say name one person. Could have been any of them. Could have been any of them. It's not Nick. It's not Frank. It's not me. Scrolling to the top. Oh my goodness. Oh my goodness. Guess who it is? The correct answers, of course, and again, it says right here in the question, name one person. You did not have to name all three. If you spent time naming out all three, I only asked for one. I'm sorry, but I did. Hallie or Emily or Drew, any of these three were acceptable answers. And guess who it is? At the buzzer. Follow the trend. You finally did it. It finally popped up first. He's been here the whole time. Follow the trend. Your name is at the top. Congratulations. Follow the trend. Remember, guys, if you do not win, or if your name is not currently on the wheel, you can message either Emily or Hallie or Drew right now and get 40% off the Edge Finder or the Stock Box or anything else that we sell. There you go. Follow the Trend was paying attention. He was paying very close attention. So congratulations to him. Let's spin the wheel, everybody. Let's spin the wheel. And then after this, Nick will be... Did Nick come back from the bank, Chandler? Is he back in the office? Because after we spin the wheel, Nick will most likely be joining us again to go over some more charts and take us to the FOMC meeting minutes. He's watching. Okay, cool. All right. 12 names up on the board. Congratulations to you 12. One of you has your choice of an Edge Finder or a Stock Box, and that person is... It's Follow the Trend. Wow, look at that. What an underdog story for Follow the Trend. Wow, congratulations to you. That email right there, support@a1trading.com. You can email. Your choice of Edge Finder or Stock Box is yours. Congratulations. But if not, or if you didn't win, rather, we're going to drop a link right now where you can talk to Hallie or Emily or Drew. They are online right now. They are real people in the office who will talk to you about our 40% off sale, Edge Finder, Stock Box. I showed them off earlier before the trivia segment, as well as Pulver Alerts, VIP Discord, and even Trading View indicators, guys. We do it all. With that, we are going to take a super quick break, and we will be right back with Nick. He is back. He's going to go over some charts. I think we'll have Freak on in a little bit too. And we are going to check out the FOMC meeting minutes here in just about an hour. So right after this, we'll be back with Nick.
Get over here. Come here. A little closer. Come here. Gotcha.
All right, and we are back, and that was fun. That was great. Can we get in the chat? That is our third trivia in the last few weeks. Those are a lot of work to put together. Can we do a community effort here to thank James for doing that? That was a lot of fun, James. Thank you for putting that on. Shout out, James, putting together trivia for us, giving some edge finders and stock boxes away. And that was really a lot of fun. Yeah, so type thanks in the chat. That was really cool. And if you guys want to see more of those in the future, thumbs up the stream. I don't know. We'll do more of them. They're a lot of fun. All right. So we got more charts here, and we've got only about an hour before we are going to get into some FOMC meeting minutes stuff. I thought we could do something kind of fun because earlier I did a whole bunch of chart analysis. You can scroll back and the markets haven't moved that much. So I don't want to run everything through again right away. I figured what might be a little bit of fun. I trailed at the end of my last session the idea that I personally trade 3 different strategies. I trade a dollar cost averaging strategy. I trade a momentum trading strategy, and I trade a option selling strategy. Would you guys like me to go through some of that stuff? I'd be happy to. Do you want to talk some strategy, or should I do charts? You guys want to do some chart analysis, or do you want me to go through some strategy? I can do either one, but spam it in the chat. What do you want me to do? You want me to do strategies? We got an hour to kill. We can do some strategy discussion, or we can talk about some current charts. Take your pick. We could do whatever you guys want to do. While I wait, I'm playing some music. We're big LaCroix fans in the office here. Anybody like LaCroix? I'm using the hour to go and eat. All right, bring us back something. If you're going to get something for yourself, you got to bring back something for the whole stream. Okay, you guys want to talk some strategies? Let's do it. So, from a content creator perspective, talking about strategies is something that you can only do so many times before you go insane. Current chart analysis I like doing because it's like, okay, every day the markets are moving. There's new information. I never get tired of making content because I'm trading anyways. I'm studying what's happening in the markets anyways. It's fun for me to do that. However, I don't talk strategies that much. I used to do it years ago. My YouTube channel, like every video was how to do this, how to do that. It was very educational focused. And I've moved away from education over the years. To be completely honest, like I'm not here to educate other people about the markets. To be completely honest, that is not my primary goal. Now, if you learn something from live streams, videos, etc., then excellent. I'm thrilled. I'm very glad that you're learning things. But as long as we're on the same page, I'm not actually here to educate you. Now, why do I say that? Well, it's because anybody who tells you they come on to YouTube and social media out of the goodness of your heart and they want to save you and help you in the markets is probably not telling you the full truth. They probably have something to sell. There's nothing wrong with selling something. However, I'll be real with you guys. My number one goal here is to actually do what I do, which is I trade the markets. I love making content about what I'm doing in the markets, but I'm not necessarily first and foremost trying to teach you how to trade. That's just being 100% real. Again, social media will tell you otherwise. People will be like, oh yeah, no, I want to make you a successful trader. And I want to see you guys succeed. That's awesome. But that's not my first and foremost goal. I trade the markets. I love this stuff. I stare at it night and day. However, if you pick up things and you learn things from my videos, then that's exceptional. I'm really happy to see that. I love getting those comments when people say, you know, your videos have been helpful, or I've learned this thing from your video. I love that. That's awesome. But again, it's not my first and foremost goal. So with that said, let's talk strategies. I have 3 different strategies that I use. One is incredibly boring. Actually, no, they're all pretty interesting, but they're very simple. So I have a portfolio approach in everything I do. I don't trade to make money next month. I don't trade to make money next year. I make money in the markets for the long term. I like to think of my entire activity in the markets as an ASA, an advanced savings account. Now, if you just want passive return, you can put money in a savings account, or you can put money, people like to put it in the S&P 500 and just wait and hope that the market goes up. There's all sorts of different approaches that you can do in the financial markets. And a lot of times people will tease and they'll say, Nick, what's the point in trading when you could just buy and hold SPY and make a ton of money? It's so much easier just to buy and hold SPY. Why are you doing all this work? Well, let me show you a really important chart. Okay, this is really, really important because I get that question pretty often, actually, guys. I get the question, Nick, if you're shooting for 20% per year or something, why not just buy the S&P 500 and hold it? Well, my friend Boris put out a really cool tweet, and I wanted to show this to you guys. You can follow Boris at FXFlow on Twitter. Good friend of mine in the trading space. Boris put out this chart, and this is the S&P 500 over the last, 200 years, 150 years? But I want to show you something. When you look at this thing, yes, if you had bought and held and never said a word, you did exceptional. That being said, there's a little bit of bias here. You're taking a look right now currently at the best performing stock market of the last few hundred years. The S&P 500 may not be the best performing stock market in the next couple hundred years. So my point with showing you this chart is saying, look, if you had just bought and held, you did exceptionally well. So why the heck would you trade? Well, here's why. If you had looked at this market during this time, you saw, oh my gosh, this thing is going straight up in the 1990s. We're making so much money. Put your money in stocks. It's easy money. Why would you be anywhere else? There was a point where if you were the unfortunate soul to have bought in the late 90s and held, if you say, I want to buy and hold, okay, great. You had what is literally called the lost decade. I want you guys all to think about something right now. Ready? We're going to do a thought experiment. What if I told you that you put all your money in an investment and in 10 years, your investment had moved nowhere? What if you had put, let's say you saved up $100,000 for retirement, and in 10 years, your $100,000 was worth $100,000. Well, it gets worse, okay? Because it's not worth $100,000 anymore because of inflation. So during this lost decade, not only did you buy and hold and make no return for 10 years. I don't know if, like, actually stop and think about that for a second. 10 years, your money did not help you, did not improve your state of finance. It didn't improve your financial situation one bit. You invested and it sat there for 10 years and did nothing for you. That's hard, right? Now, don't get me wrong, I'm not a bear. I'm not telling you it's all doom and gloom, but my point is I don't want to get caught in this scenario. And that is very much a theme in US history. Even though this is the best performing stock market out there, right, of the last couple hundred years, the best one still had years. And don't even get me started on the 1929 crash. Your money was flat until 1950, right? You didn't really start making gains until 1960. I don't know about you, but I'm in my late 20s and I want return on my money. Like everybody wants return, but we're at a stage where it's like, okay, you want to grow wealth. Well, you're rolling the dice if you buy and hold. That is, long story short. You are rolling the dice and hoping that you get this period. But what if you get this period? This is a long time. Again, I think that it's important that we look at this chart because modern finance history only shows you this chart and forward. So if you only ever look at this, you might say stocks only ever go up. But people who have lived longer than us, for the younger crowd, for the slightly older crowd, you have some wisdom on your side. Some of you lived through the lost decade. Some of you lived through the 1970s to 80s kind of sideways world. 1960, really, your money did not go very far between 1965 and 1990. This is why history, two great passions of mine are history and markets. And that has served me really, really well in the financial markets, because if you know your history, you know stocks don't go up forever. And I'm not bearish. I'm not saying I think the market's going to crash tomorrow. But, and Pablo in the chat says this graph looks scary. Looks like it's about to crash. I mean, I'm not saying it will crash. I'm not a bear. However, it's a fair conclusion to say, look, the market doesn't go up like this forever. It has periods of great growth and it has periods of great decline or sideways movement. Long story short, the reason I showed you that is because all of that said, I don't do simply buy and hold. Now, I do buy and hold specific stocks and things that I invest long-term in. Do not get me wrong. I'm a believer that good investments over time can do wonders for you. But I like to do what is called smoothing my equity curve. Okay. So I have 3 strategies that I use. I use a dollar cost averaging approach in FX specifically. I also use a fundamental analysis, sentiment analysis, technical analysis approach, aka momentum. Momentum is what I talk mostly about on YouTube. To be completely fair, as a content creator, it's the most interesting to talk about. It's the most exciting. And finally, I have a, let's see, what's the best way of phrasing this? I have a short volatility, short vol options selling approach. Okay. So these are my 3 core strategies. Now, for dollar cost averaging, we can keep this relatively simple. I have a grid system that I trade Forex on. It's a robot. It's the simplest, most boring thing ever. And it just essentially, let's see, what's the best way to explain this? It basically just has a grid, which a grid is essentially this idea that, let's say that the grid is buying the dollar Swiss. And it's just going to buy in pieces the dollar Swiss. Let's say I have a long-term bullish bias on the dollar Swiss, right? If this thing goes up, it cashes in, it makes money. If this thing drops, it adds more to a position until eventually it corrects. Now, the other thing is that I trade my grid approach in the direction of positive swap. In Forex, you can collect a positive swap for holding things overnight. When you hold dollar Swiss long, you actually get paid. So this is a very, very boring approach because it's super low risk the way I do it. I have tiny lots per trade, and I'm essentially just adding and then cashing out when it goes in. And it's all automated. It's a robot that I use. If you want information on this, let me see. Let's just go a1trading.com. I don't talk about it very much because it's so boring and it's not exciting to talk about, but it's something that I run in the background and have run for a long time. If you go to a1trading.com, you can go pull up the Grandmaster EA. So this is the link. If you want to learn about that bot, there it is. It is the simplest approach. It is not a holy grail. Nothing I do is a holy grail, but this is one part of the portfolio. So my whole approach is I want to smoothen out my equity and generate positive income over time from the markets. So one approach, one of three, is a dollar cost averaging approach using Forex. Number two is my momentum trading strategy, which is what most people who watch me are familiar with on YouTube. So I'm looking at, the edge finder. I'm looking at fundamental analysis, technical analysis, sentiment analysis, and this is where I allocate the majority of my capital. I'm looking for setups. I'm taking trades in the direction of what fundamentally looks strong or weak, long if it's strong, short if it's weak. And I'm looking for charts that look strong, that look like they have more potential to continue. Currently, I'm very bullish on indices. I've been riding the index move for some time. Earlier this year, I was trading gold quite a bit on the long side. So I ride momentum where I can find it, long or short, but primarily long things that go up over time. I like to be long gold. I like to be long stocks, but only when the fundamentals make sense. And this has served me well over time with the help of the Edge Finder. By the way, just a plug, we talked about it earlier. Edge Finder is currently 45% off for our Black Friday sale. If you want access to the Edge Finder, we'll drop the link here in the chat to speak directly to our support team, where you can get access to the tool that I use to find the trades that I take with my momentum trading strategy. That link to chat with our team will be dropped here in just a moment. So grab a copy of that if you are interested in building a fundamental bias on charts. It is the tool that I use every single day to scan market data, to scan sentiment data, and much, much more. Okay, so finally, my options selling strategy. So options selling is something that I do very, very often. In terms of trade volume, it's the highest volume thing that I do. So I sell puts and I sell calls. And it is really simple, but it is not always easy. The concept of selling puts and calls is kind of a fascinating one. So I sold a call this morning. I'm sorry, I sold a put this morning on Exxon. Let's do Exxon Mobil. So here's an Exxon Mobil short put that I did this morning. Exxon's a company I wouldn't mind holding in my portfolio. And what I did this morning was I sold the 114 put. I collected about $1 in premium. Now, if you don't know what that means, I didn't actually just make $1. When you do options, you do contracts, and each contract is 100 shares. So I made $1 times 100, $100. Not a huge trade or anything, but this is one of many trades that I've got currently that I'm doing in the options side. So check this out. The 114 puts that I sold, essentially, I get paid $100 to sell that put at 114. If the price goes down to 114 or below, I get assigned the shares, meaning I have to buy that 100 shares of stock from the put owner. I'm the put seller, someone else is the put buyer. If they at any point want to sell 100 shares of Exxon, I am the buyer. I'm the designated buyer according to our contract agreement, right? That's how options work. So if the market tanks, I'm on the hook to buy 100 shares of Exxon. But I don't mind. I'll buy Exxon if it tanks. I'd like to own some in my portfolio. In the meantime, I get to put right in my pocket $100. I'm an option seller. That is my upside. I can only make $100 max. Now I can lose a lot more than that. If I get assigned the shares and the shares go down a good bit, then yes, I can lose more than that. And it is actually an oftentimes negative risk to reward trade. But the beautiful thing about it is when you're option selling, you getting paid that premium, that $100 that I'm getting paid, most of the time, I just get paid $100 and nothing happens. Meaning the stock goes up, stock goes sideways, or the stock even goes a little bit down, but doesn't close below 114. And I get to keep the premium. Most of the time, you can see I'm having a red day today. However, many of my options positions are very well in the green that I've sold puts on. I've sold puts on Amazon, sold puts on Alibaba, Microsoft, Apple, Medtronic, ExxonMobil, Pfizer, Nike, and Uber. And almost all of these positions are making me money right now. And the theory here is that option selling produces a nice smooth upside move. And then every once in a while, you get smoked. And then you make some money, then you get smoked, and then you make some money. And when I say get smoked, what I mean by that is that the volatility in the market expands dramatically. And then I have to go buy a bunch of shares because everything fell apart. And that happens. That's going to happen as an option seller, especially if you're selling primarily puts. I love option selling. It is one of my favorite things in the market because it is a lower beta strategy to simply buying and holding. What do I mean by that? Well, beta is essentially risk compared to just buying and holding, right? When you sell options, you are getting paid something up front and you might have to buy the shares. But if you do buy the shares, they're at lower prices than they are today. So if I get the chance to buy Exxon at 114, I'm happy. I would happily buy Exxon shares at 114 because then I could start selling covered calls and reverse the strategy, right? The wheel strategy is a very tried and true, very simple approach in the financial markets. And it typically, by the way, does really well in sideways markets. That is why the wheel strategy for me is something that I incorporate, because if we get this environment again, right? If you get a sideways decade, if I'm selling cash secured puts and covered calls throughout that decade, I'll make money. I may lose money in other strategies and other approaches. Buy and hold might not work very well, but the option selling strategy will do well. That's the whole point of incorporating more than one strategy. I know a lot of traders love to have their one strategy and that's all they do, and I totally respect it. But for me, I'm not a one strategy kind of guy. I use 3 core strategies. Chandler, can you do me a favor and just clip that conversation? I feel like that would be a great video. Me reacting to Boris's chart here and then talking about the 3 strategies. Can we make that a clip? I just want to say that before I forget. Maybe like a video clip for Thanksgiving Day when we're out of the office. Sorry, guys, you're seeing the behind the scenes content creation side. But I feel like that was a pretty good conversation. I really enjoyed walking you guys through that, generally speaking, because at the end of the day, guys, for me, what matters is if the stock market just rips and goes higher and higher and higher, That's great when it's going higher and higher and higher. But I've lived through this period. 2022 was painful. 2020 was briefly painful, but then there was a lot of pain relief from the Fed printing a million bajillion dollars, right? But this was painful. And that woke me up to a lot more concepts of like, I need to be not necessarily fully hedged, but prepared, right? For downturns. Are you no longer a Forex trader? No, I said earlier, I do trade Forex specifically with dollar cost averaging approaches through a robot. And I also do place some momentum trades in Forex occasionally. I actually trade a really wide range of things. I trade indices, I trade commodities, I trade currencies, and I trade individual stocks. I even trade crypto. And I like trading many different things and different strategies because it adds some level of diversification. There's many ways to diversify. You can diversify in holding 500 different companies. You can also diversify in employing multiple trading strategies that do well in different market environments. Also, if that conversation made sense, if you enjoyed that little segment that we did talking about trading strategies for different market environments, do me a favor and just thumbs up the stream. Why is US 30 at all-time highs, but not NAS 100? That's a good question. US 30 and NAS 100 are indices. Indices are just baskets of stocks. The baskets themselves have different stocks in them. The Dow Jones, let's talk about the NASDAQ. The NASDAQ holds a lot more technology, which is having a very mixed day. And check this out. Financials are killing it. Banks, credit card companies, capital market companies, insurance companies, they're doing incredibly well in the last 1 month. Tech stocks, not so much. So if you're wondering why is the NASDAQ not at the all-time highs in the last month, look, tech stocks have been actually not as exciting as financials and as industrials and consumer cyclicals. So there's your answer. You can always check. Remember that if you trade NASDAQ, you should probably, if you trade the NASDAQ or the Dow Jones or the S&P, you should take some time to go look at what's actually in those things. What are you actually trading? When you trade the NASDAQ or you trade the Dow Jones, what are you actually trading? You're trading baskets of individual companies. So the reason is technology has been actually lagging the market recently, and that's why the NASDAQ is not at the all-time highs. I have a position that's dragging my account today, which is SMH. SMH is back in the red for me, has gone nowhere in the last few weeks. I have a couple of really annoying positions currently. SMH is one of them. SMH like actually kind of kills me because this one went crazy in my favor, and I don't want to explain this because I explained it in detail in a previous stream. However, long story short, based on my own momentum trading rules, I did not get a higher high and higher low for me to trail a stop. And I watched this thing sink all the way back down to break even and now just chop around. I could end up taking a full loss on this one, which would stink, but it happens sometimes. What is your favorite Forex pair? Currently, I really like dollar Swiss because it yields positive return holding on the long side due to positive swaps. You can also trade dollar yen, but dollar yen is very volatile compared to dollar Swiss. For dollar cost averaging, I prefer dollar Swiss. I also really like the euro. Euro dollar is a pair I really like. The other position that is bugging me right now is this Chinese stock market trade that I have. The Hang Seng index that I bought. I use an ETF, MCHI, and I'm down $1,600 on this one. So I've been just having some not as great trades the last few days. But it happens. NAS is positive. I'd love to see SMH pull it together here. Let's take a look at the 1 hour chart. And you can see this thing has just gone a whole lot of nowhere. It's gone sideways. I still really like the semiconductor industry. NVIDIA's earnings came out, and they were pretty exceptional. I own NVIDIA stock by itself also. And NVIDIA just seems to have lost some of it's out of favor right now. And this is the thing. When you trade or own things in the markets that are out of favor, it can be boring. It can be really tedious to wait for them to either come back in favor or truly take you out of the position. Now, NVIDIA in my account is just a stock that I am holding right now. I don't have any options plays on it. I don't have a trailing stop on it. It's just a stock that I own. I actually wanted to get 100 shares so that I could then sell covered calls, but I didn't get a chance. So I bought NVIDIA with the intention of getting 100 shares if it kept going down so that I could then sell covered calls, which when you sell a covered call, which I've got a covered call on Tesla right now. Let's go look at Tesla. And again, if you recognize, I jump all over the place. I don't trade just Forex or just gold or just stocks or just NASDAQ. I trade a little bit of everything. So if I go take a look at Tesla right now, Tesla is one of my favorite stocks to trade. This year, I have traded Tesla a lot, and I've traded a lot of options on Tesla. So let's take a look at Tesla. So on Tesla, I own 100 shares of Tesla, which have done phenomenal, by the way. I'm up 49% on my shares. Tesla, I own 100 shares, and where's my average cost basis on Tesla? My average cost basis is going to be $229.50. Let's mark that. Let's mark $229.50. Close enough. So that's like my average cost basis. By the way, if you want to use the brokerage that I'm using, if you're in the US, the brokerage that I'm currently using is called Webull. We'll drop the link here for Webull if you'd like to check them out. It is primarily for US traders. There are some other countries that can use Webull, but I'll give you more broker stuff in just a second. But maybe we could drop the link here in the chat for Webull so that you can check them out if you're interested. But anyways, so check this out. I have Tesla long shares at $229.50, and the market has gone, or the Tesla shares that I own have gone up a lot. Well, I also sold calls at $420. What that means is that I sold the right to my shares past the $420 price. So if the market for Tesla shares go flying up to 430, then I'm long shares. Those will go up in value. But then my call will start becoming a losing trade. Now, why would I do that? Well, because I make extra money if Tesla does not go above 420. This is why I love options. It is a way to hedge bullishness in the market. I'm going to drop the link here for Webull, and let me just get that here in just a second. Okay. If you're interested in Webull, like I just said, here's the link to it. It's the brokerage that I use for options trading. I mentioned that it is primarily for US traders. For non-US traders, options are tricky in other places. You can do options, but it's going to be dependent on your local laws, regulations, etc. You can check Webull to see if it's available in your country, but options specifically are something that are very jurisdiction based. So check the rules for your own country if you're interested in trading options, but it's something that I really love doing. I really love what options does specifically for my portfolio. Did anyone in the chat switch from scalping to swing trading? And how did you go about it? I know this question's not necessarily directed to me, but I'll still answer it. If you're a scalper, I'll tell you something. I don't know anybody who is a profitable scalper. And I know a lot of people, but I've never seen someone prove it. I've seen many swing traders and even hourly chart traders who have logged in and showed profitable results in their brokerage account, but I've actually never met a profitable scalper. I'm not saying that you can't make money scalping, but every time you're in and out of the market, you're paying transaction fees to your broker. So the less you trade, the less your fees ramp up, right? I think scalpers inherently battle two really difficult forces. Broker costs are way higher for you, number one. Number two, the lower time frames are full of a ton of noise. So you got the spread working against you, you got noise working against you. I don't doubt that there are probably profitable scalpers out there in the world, but absolutely 99.99999% of people, in my opinion, who try and scalp the markets actually lose money. I know a lot of people who are profitable option sellers. I know a lot of swing traders that make money. I know a lot of fundamental traders who make money, but I don't know a lot of technical only scalpers that make money. So Bitcoin's back slightly in the red. I might get taken out of this trade. I've got a stop trailed into profit here, and it is very possible that this is going to take me out here today. If we take out those lows, I will be taking profit on my Bitcoin position and moving on from it. Let me see. This was the, if you want to see what an example of an options trade looks like. So I mentioned earlier to you guys that I did an Exxon out of the money put that I sold. Sold strike price 114, and this is what it looks like. So it may be hard to see on your screen, but I'll tell you basically, I collected $100, $101 for selling that put to someone else in the market out until December 27th of this year. And if the price of ExxonMobil goes down to 114 or below, I will get to buy the shares at that price and be credited that premium that I collected, which was $1. So my actual cost would be the strike price minus the premium I collected, so 113. It's kind of awesome. It's basically like saying you get to buy the shares at you get to buy 114 Exxon shares at 113. It's the cool part about options. Options selling, I'm not big fan of option buying, like buying calls, buying puts, unless you really have a very solid setup. It's really, really quite a difficult, because most of the time options expire worthless. Most of the time, if you buy calls, if you buy puts, the market kind of goes sideways or not that far, and those calls and puts expire worthless. So that's where the kind of the edge is for option sellers, is you're just collecting money all the time. And occasionally you have to deal with a time where the option expires significantly in the money and you have to front the money and deal with the drawdown. How would you go about the switch to swing trading? Well, again, what I would say is, first of all, swing trading, in my opinion, and there's people who disagree with me. I know a lot of people who love day trading. They love shorter time frames. One of the major reasons I love swing trading is because although I do these streams every day, beyond these streams, I don't spend much more time on the charts. I probably usually, today is an exception because I'm streaming a lot longer. Usually I stream for about an hour a day, an hour and a half a day. And my total time in front of charts, like trading, is about that time, about 2 hours or less, usually an hour to an hour and a half a day. And then I'm off doing other things. Swing trading allows me to do that. Scalping, day trading, yes, if you have a good day trade, you can be done in like 30 minutes. But what I like is that with swing trading, I know I'm never going to do more than like an hour in a day, which is great. So that being said, ask yourself, if you really want to make the switch to swing trading, what is it going to mean? Well, it's going to mean it's going to be less exciting. Swing trading is not as fast paced and exhilarating, but trading is supposed to be boring, in my opinion. So, swing trading is great because it's slower paced. You don't have to, like, if I like a trade setup, I don't have to sprint to my desktop, punch the trade in as fast as humanly possible and try and get filled. Like I can take my time setting up my positions, and I can kind of just moderate them for 30 minutes to an hour and a half a day. It just depends the day. So for switching to swing trading, if that is something that you're interested in doing, you probably do need a little bit more capital to swing trade, depending on what if you trade a Forex brokerage or you trade a futures brokerage, stock brokerage, there's different capital requirements for different things. So look into the capital requirements for your asset. I know a lot of traders love to trade gold on Forex brokers. So if you're a Forex broker trader and you trade gold on a Forex broker and you use like lot sizes instead of like futures contracts for gold, or what I do, which is trade GLD ETF, you probably need a lot more capital for that. If you're going to swing trade gold on a Forex broker, you need a pretty large trading account, maybe like 5,000 plus. I don't really know exactly because I don't trade gold on a Forex broker. I trade like GLD, which is an ETF that tracks the price of gold. So I can just trade it this way. This also gives me the ability to do options on gold if I want to, which is really fun, really cool. I love that about, ETFs. I can trade options on them. I can also trade options on Bitcoin now through ETFs like BITO, or where I have my Bitcoin position, IBIT, which might actually get me stopped out today. I might be taking profits on this Bitcoin move, which I'll be a little sad to see it go. This has been a really awesome trade. But if we break support here for Bitcoin, it's going to be time to just take profits and move along with, finding the next setup. What's the difference between options and futures? Futures, I would say if you Google it, you'll get a better answer than what I've got. But options are just puts and calls. Futures contracts, you just buy or sell futures contracts on a futures brokerage. But they're two different, types of contracts, if you will. Options contracts, futures contracts are two different things. TLT's down 0.5% today. Had a big jump yesterday. Bonds did. Yields up by 0.72%. Dollar yen down today. I thought this was a pretty clean looking chart. Dollar yen still looks strong, but I don't have any readings on it at this time. In fact, I've been a little frustrated. The Edge Finder has just had not very many setups. SPX500. So let's just go through the setups really quick. So SPX500, I'm going to go through the watch list really quickly. Really simple, breaks and retests. So nothing too much to get into here. If the S&P 500 has this kind of move, then I'll probably look to take a momentum long trade. So keep that really simple. Let's move on to the next pair. Pound CAD, bearish setups. So pound CAD. Is that a 50% retracement? Yeah, so somewhere in this range, I like that idea. Possible sell side continuation. A little bit of a broken momentum chart here, which could lead to more downside. Look at that big rejection off of that on the daily chart. So that's an idea. Kiwi yen, NZD JPY. Would probably look for something like this. Big push lower. If it pulls back, might be worth looking at a setup for me. Euro CAD. Euro CAD actually looks pretty clean. Similar to pound CAD, actually. 61.8% retracement looks interesting here. If you get a bigger retracement up, might be one I look at. NZD CAD. Last one. Don't love this chart. Pretty choppy. And we're done. So if I wasn't streaming, that would have been my trading day right there. The only other thing that I would need to do, so I did my markups. I watched the Edge Finders watch list. That would have been my entire trading list. How long did that take us? That took us less than 5 minutes to go through the ideas. So for me, top setups, look for technical setups on the daily or 4-hour chart. Take small positions and manage the ones that I'm already in. So Bitcoin's no longer a trade, but it is a setup. So actually, yeah, it took me less than 5 minutes to do everything on what I would actually do if I wasn't streaming. Basically, I have my stop loss trailed on Bitcoin, so there's nothing to do here. If it stops out, then we're done with that trade. But that was an entry back here. The other thing I'm managing is SMH, which there's nothing here to do. It's just gone sideways on me, so stops there. Nothing to do there. MCHI, the Chinese stock, in the red for me here. Might stop out. I walked through those 5 charts that are on my watch list here, and I'm done for the day. That would have been my entire trading setup for the day. So the reason I point that out is because once you know your system well, it doesn't need to be a constant staring at charts, watching every minute to minute tick. So the rest of this week, guys, in the US, we have a US holiday. It's Thanksgiving. And my family's coming in town, and my mom is, oh my goodness, my mom, my wife, my sister, they are going to cook up a wonderful, heavenly food. And if I come back a little bit bigger, you guys better not say anything about it, okay? I don't want to hear it. I don't need you to tell me. I need to get back in the gym, okay? But my point is, during that time, what I just did, that is what my daily trading activity looks like. If I wasn't streaming. I love streaming. I love interacting with the chat. I love walking through concepts and learning new things and studying the data more comprehensively. But on a bare minimum basis, if I was working, I used to be in software, or I still am in software, but I used to have a software full-time job. That's what my trading setup would look like. And that's why I love swing trading. That took me less than 5 minutes to do everything I needed to do for the day on the charts. And then I can go do my day. In a bare minimum case, I can do 30 minutes or less, 30 minutes max. I just like to take my time because I do this. I also am a content creator, so I enjoy doing this on stream, taking my time, explaining things, etc. But the reason I point that out is having a simple process that is so regimented and repeatable is the only way you build long-term consistency doing this. If you guys want this tool that I just did all that on, the Edge Finder, if you're new to the channel and you haven't heard of the Edge Finder, then the Edge Finder is your new best friend. It's currently 45% off. It's our market scanning software that I use every day to find the trading setups that I'm looking for. We just walked through, like I said, the 10 minutes or less approach to using the Edge Finder to help find ideas. Of course, it's not a magic money printing machine. Nothing is. It's not always right. But it's generally speaking helping me to spot more sentiment, technical, and economic data-based ideas in the markets. If you want a copy, it's one-time fee. You don't have to pay monthly. It's one time to get access to the Edge Finder. And it is currently 45% off. It's our biggest discount of the year. If you do not have a copy right now, we just dropped the link here in the chat. Send us a direct message. Let us know you're interested in getting a copy during the sale event before it ends, and we will hook you up. Buy gold now. Let's go look at gold. What's gold doing? Gold looks really not very interesting to me right now. I'm not bullish, not bearish. I analyze gold all the time because a lot of the audience loves to trade gold. But I think a lot of times I'm just in a real, okay, once I get past a certain number of hours or minutes on the live stream, I just get more and more candid about it. So here's the thing. As a content creator, everybody wants to talk about gold. They want to look at gold. But going off of what I just discussed, like keeping my simple approach as simple as possible, when I look at gold, my style is not the only way. I understand there's people who have different trading strategies than me, people who trade and do it differently than I, and I totally understand that. But let me just explain that for me personally, gold is really, really indecisive. You have resistance holding, you have support holding. Fundamentally, it's kind of mixed. So there's just nothing for me to do here. Again, if we go back to what I was saying earlier, if I was doing my 10 minutes or less idea in the market, gold would be absolutely nothing to look at. There's no setup from the Edge Finder, and technicals look really ugly, right? Daily chart looks mixed. Bearish rejection, huge engulfing candle came in, but yet you're in an uptrend on the year. Support held really well, big green, pull back to this area. Like, you could make a bullish or a bearish case technically where we currently sit. You could say, if you want to be bearish, you could say this is a lower high potentially, and we may go test these lows. I would say for me, technically, what I'd look for would be a break through these highs would show, okay, bulls are actually really trying to come back here. Or a break through these lows would tell you that sellers are in full control and can take out key levels like this 2560 level. But where we currently sit, there's nothing for me to do. Just kind of a sit back and wait on gold. Nothing to do here. I don't want to get involved here. There's nothing for me here. Again, you might have a different approach. I'm not saying I'm the only, it's my way or the highway. I understand there's people who trade differently than me, but that's just what I see. I see very much neutral outlook for gold at this time. I'd like to see the fundamental story become more clear. If you see the dollar crack, if the dollar gets weak from here and US economic data starts coming in real soft, then I think you have a story for gold bullishness. But if the dollar stays strong like it has and the geopolitical landscape improves, which again, we saw some peace negotiations with Israel, like if that story improves, that's a bearish catalyst for gold, because gold's been really bullish off the uncertainty going on in the Middle East, etc. So again, I see like forces at play in both directions here. So I just have a neutral reading until the story becomes more clear one way or the other. The Dow Jones completely came back. This is pretty impressive. Dow Jones 3 up hours in a row, bringing it back to a break-even day and near all-time highs again. VIX is down by 4% this morning, or I'm sorry, this afternoon, which serves well for my Exxon play. I'm up a whopping $9 on my Exxon play. Would you say NAS is going the same as gold, Nick? No, I like NASDAQ a lot more than gold. However, I like the S&P 500 more than the NASDAQ. In fact, the NASDAQ, I'm actually getting a neutral reading, but S&P, I'm getting a bullish rating on the Edge Finder. So this is actually like a live idea for me. S&P 500, you get a break through the highs. I love that setup. That's cookie cutter, break and retest. I would take that trade over and over and over and over. Edge Finder confirmation, good technical setup. But let me reiterate to the new trader who just heard me say that. They said, Nick just said he would take that trade over and over and over. Well, I'm not saying it's going to work every time. I'm saying that I would take that trade over and over, fully accepting that sometimes I'm going to lose. Sometimes this setup comes in, break, retest, I go long, I put a stop. Most of the time, I like that setup. I think it would work for me. Sometimes it's going to lose. Sometimes it's going to lose again. Sometimes it's going to lose again. Then it's going to work. It's going to work. It's going to work. You see what I'm saying? The point is, trading is not about something that works every time. That never exists. It's all about taking the right setups over and over when you're supposed to take them, keeping your risk under control, and showing up and finding the setup again and again. That's really what it's all about. So I like Edgefinder's bullish idea on the S&P 500, but waiting for the technical setup is a must for me. I'd also be interested if you get the S&P dipping down into, 5850, 5900 range. I would give that a shot. That was such a beautiful pullback buy. So I like the S&P long. I'm just waiting for a setup on it. Will you watch the Fed talk? The Fed is not talking today. Today you have meeting minutes, which is different. The Fed's meeting minutes are going to essentially be like press conference notes. So we get this question often, and we've got a couple minutes to go here. We often get the question, where's the live stream? Where's Jerome Powell? And you guys will see it in the chat. In a few minutes, people will be asking the same thing. Where's Jerome Powell? Put him up on the screen. He is not speaking today. Today's meeting minutes are a publication of notes taken in regards to a closed door Federal Reserve conversation / meeting. Okay? So we're not going to have Jerome Powell speaking. He's not speaking today. This is just a release, a release of essentially comments made by the Fed committee behind closed doors. SoFi's killing it. Let's look at SoFi. SoFi has been a fun stock to watch. Up to $15.50. My goodness. There's been a lot of these fun names going crazy. Palantir's another one. You know what's another one? It's Coinbase. Coinbase has been going crazy here recently. Is that an all-time high for Coinbase? No. Coinbase IPO'd in 2021. Went up to as far as $428 per share. It's currently trading at $298. You look tired. I am kind of tired. You know what it is though? I keep like rubbing my face because I don't know if anybody else is experiencing this, but I am like super dry. I get like the fall weather coming in, cold weather kind of coming in, and my face is dry. I've been using like lotion and chapstick, and every night what I do is I just fill an entire bathtub of lotion and I just lay in it and I go to sleep. I just turned on my light. But yeah, I mean, we've got meeting minutes coming out in a few minutes. Could it move the markets? Yes, it could. Is it certain to? No. Meeting minutes usually does not cause a huge move, but every once in a while, you can get some serious moves from meeting minutes. Because what happens in them is sometimes you get a big kind of revision to a previous statement or a way of saying something that comes out and is super revealing. Like maybe Fed plans to cut rates sooner or plans not to cut rates as often. In fact, we haven't been looking at the Fed Watch tool. Let's look at the Fed Watch tool. I haven't been looking at it as much because you can still get the same kind of information just by looking at yields. So yields have been going up, up, and up, which would tell you that the expectations for rate cuts are lower. So there's currently a 60% chance that we are going to see a rate cut in December, and a 40% chance that you're not going to see a rate cut and that they're going to hold rates. At one point, this was very high. At this point, I'm sorry. At one point, this number was like 80 plus. I think it was like 90+% chance, according to the bond market, the bond futures market. That's how this stuff gets calculated, by the way, that we would get a rate cut. And now it's only 60%, which is still high, but not nearly a 90% chance. Now, what we need to understand, guys, is between now and the December 18th meeting, which is when this decision will come out from the Fed, whether they're going to cut rates or hold them where they are. Between now and then, we have a CPI report. We also have a PCE report. We also had an NFP report coming. So these numbers and these events are going to be volatile for the markets. Now we get PCE tomorrow, which will be market moving, but CPI and NFP are likely to be the ones that move the markets the most. So if you watch gold, if you watch stocks, if you watch currencies, all of these things are going to move a lot in the coming month. And the trend has been recently inflation ticking up, jobs data strong. If that persists, you could see this number continue to come down and this number continue to go up. That seems to be the story right now. Seems to be the story right now that yields are climbing in the United States, which is forecasting that the Fed may not actually cut rates in December. I kind of lean towards they might not cut rates, but it very much depends. I'm saying that that's my hunch, but to be completely honest, My hunch doesn't matter that much compared to the CPI and jobs data that we're going to get. That's going to tell us with pretty strong conviction whether the Fed will choose to cut rates, lower borrowing costs, etc., or hold them where they are. If the economy is real strong, they may not cut the rate because they may feel they don't need to, right? If you cut rates for when it's not appropriate to, inflation can come roaring back, which would be no fun. In fact, we don't want to catch ourselves back into a 2021, 2022 scenario where the market melts up and then causes a ton of inflation. We have wars going on, of course, at that time, which made it much more difficult, but you get the point. We don't want to repeat inflation 2.0 that we've recently seen. We don't want to bring that back. So the Fed may choose not to cut rates in December, but we'll see. It's too close, or it's too soon to say, because we have, again, the CPI report and the NFP report. Those two events will likely determine whether we see the Fed choose to cut rates or not. The meeting minutes are coming out in just 1 minute. If you're enjoying the show, we've got 1,150 people here watching between Twitter and YouTube and the different channels that we're streaming to. If you guys could do me a big favor, hit the thumbs up button if this stream has been helpful to you. I'd really greatly appreciate it. I'm going to do my best here. If you guys could, maybe Chandler and James, and just chat in general, if you guys could, as you find out information from the meeting minutes, find it on Twitter. I know a lot of you guys know how to find that stuff. If you could drop information as it's coming in, that would be awesome, because then I could share it to the audience here and I could be our proxy. I'm pulling up Twitter right now. It's also Financial Juice. So yes, meeting minutes are dropping any second. Just a reminder, Jerome Powell is not going to be speaking at a press conference. Many times people think that's what's going to happen. Jerome Powell is not speaking. It is a dropping of a document that outlines meeting discussions that happened behind closed doors from the Fed. There's no Jerome Powell speaking. So I know people are going to say, Nick, put Jerome Powell up. He's not speaking right now. It's not a press conference. It is meeting minutes. All right. If you guys find anything, meeting minutes can cause moves. They also can cause no moves. So let's see if we can find some information. No major moves just yet. All right. Okay, I've got the meeting minutes right here. Walter Bloomberg on X. FOMC minutes. Many officials noted uncertainties around neutral interest rate. And usually with these things, I don't read the whole thing. I basically just look for, posted up statements, because people will go carve out this information right away. Nominal Treasury yields rose notably over the period. Factors driving the increases in yields included stronger than expected data releases and monetary policy communications that were interpreted as signaling a more gradual ease of policy easing than previously thought. And this is nothing really new. The Fed has kind of signaled that some economic upbeat stuff may slow their roll in terms of rate cuts. Broad support for gradually lowering rates. Some saw pause or faster cuts as options depending on data. Pace of job gains had moderated since the beginning of the year, and the unemployment rate had moved up on net but remained low. Consumer price inflation was well below its year earlier pace. I saw this as well. Thank you, Mike. Many officials noted uncertainties around neutral interest rates. Market participants will, let's see. U.S. short-term, here we go. Staff forecast called for economic conditions to remain solid. As in previous assessment, 2024 GDP growth projection is seen as higher. Short-term interest rate futures par earlier losses after release of November FOMC. I mean, stocks remain pretty unchanged from where we were. Gold also pretty unchanged. Doesn't seem like we're getting anything shocking, anything too surprising on this front. Silver's pumping. I don't know if I would say it's pumping. Fed minutes. Some participants said easing could be accelerated if labor market weakened or economic activity faltered. Yeah, so it seems like it's kind of staying the course that we've seen, which is data dependent. If we see the labor market cool, we'll act. If we see inflation accelerate, we'll act by, keeping rates where they are. But I think it does seem like the Fed is in a place where they see risks on both sides, right? When I say both sides, for the new people, there's inflation risk and there's job risk. And the Fed is constantly trying to balance the two things, right? So inflation risk is equally currently important to jobs risk. So the jobs market slowed a little bit. It's not terrible. And inflation's made a lot of progress, but it's not perfect. So where it kind of currently sits is the Fed seems like they don't want to move too far in one direction. If they cut rates too much, inflation could accelerate quite a bit. If they hold rates for too long, the job market could fall apart if where we currently sit with interest rates is in fact too restrictive. When I say restrictive, what I mean by that is borrowing costs being too high for too long can really hurt the economy. But if they're low for too long or too far down, it can actually spur inflation. So the Fed seems, in my opinion, kind of good with where they're at right now. If one of these things, I think that what they're probably going to do, and they're telling us this, is if one of these things starts to slide, then you might get some change in what the Fed's doing. But right now, it seems like they're kind of sitting on their hands and just saying, look, we've got unemployment rate at 4.1%. That's not bad. That's perfectly fine. In fact, the long-term average, you might say, well, Nick, that chart's going up. Well, yeah, 5.7 is the long-term average for unemployment rate. So at 4.1%, the labor market is okay. It's not falling apart. Now, it may be slowing a little bit, but it's not like crashing. And at the same time, when we go look at inflation data, we can keep an eye on these two things at once. And this is what the Fed's doing, right? So this is why we study this data ourselves. Inflation data has been trending down, but we want to watch for a change in that direction. If that changes, the Fed may keep rates where they are for longer to keep inflation at bay. If they cut rates, inflation could spike. I mean, if they cut rates too soon. So this is what we want to monitor. At the end of the day, the reason, trying to chase what the Fed is going to say all the time is difficult is because the data kind of tends to lead what Powell's going to say next. You can go look at inflation statistics and NFP reports, and that's usually going to tell you what Jerome Powell is going to say next. That's why those data points move the market so much. So what do we keep an eye on? What do we as traders actually watch? Well, we look for inflation to stay the course, trending down, or at least not going much higher. If that goes higher, dollar strength is probably coming in. Stock market might have some struggle because then the Fed's probably not going to cut rates as much. But at the same time, we need to keep an eye on the labor data. So if the labor data, just watch both, right? Watch jobs data, watch inflation, get an idea, and that's going to usually tell you what likely the Fed is going to do next. Before all the jargon, all the fancy talk, all the big talk, literally keep an eye on inflation, keep an eye on jobs data, keep an eye on economic data like PMIs and GDP. That's why we look at this stuff. We're not looking at the stuff. I mean, I look at it for fun, but most of us look at it just from purely a understanding of how the markets work. So we've got CPI data, which is trending lower. This is great news. This is why the stock market's up so much. Inflation is cooling down. Interest rates are coming down. The economy seems to be holding up decently well. So you have a good setup. What we want to look for is, okay, it's good for now, but let's keep our finger on the pulse to watch for changes in this. If unemployment rate starts to really rise quickly, if inflation starts to rise, those things are risks that change the story, right? So that's what we want to look for. We want to keep our finger on the pulse of the economic data and essentially don't overstay your welcome if you're long on risk assets, but also don't jump too early, right? Right now, in my opinion, and this is all just my opinion as always, my opinion is I'm staying bullish on stocks until something changes, until something really changes in one of those two camps, the labor data or inflation data. I'm going to stay the course. I also currently have a bullish rating on the S&P 500 on our top setups algorithm. So I'm going to stay convicted until something changes. If you start to get services PMI cracking or interest rates, start hurting us a little bit more, like they start spiking through the highs again, trend breaks down, or seasonally, which by the way, seasonally is pretty good through the end of the year, right? We know historically speaking, the month of the year trends. Let's pull up a chart for the S&P 500 really quick. Generally speaking, we're entering into a very good period of the year. December, the Santa Claus rally concept, this week, specifically Thanksgiving week, typically is a good time in the markets for the stock market. We're seeing that so far, seasonality is coming true. You got 4% up so far this year. That's pretty good for the month of November. So keep an eye on this stuff. This is why we use data. This is why 100% of my information does not come from candlestick charts. Like 80+% of it comes from macro data, studying seasonality, studying GDP, labor statistics, inflation rates, things like that. That is really, really important to the story. So yeah. Anyways, if you guys want a copy of the Edge Finder, our software here that we use to track all of this data in one spot is currently 45% off for the Black Friday deal that we're doing this week. If you'd like a copy of the software that I'm using here to look at all of this market data throughout my streams and videos, you can currently get a huge discount by sending a direct message using the link being dropped in the chat right now. If you'd like to get a copy of this, Again, it is a one-time fee to get access, and you get unlimited access to all of the different features, tools, data, etc. So there you go. Don't miss the 45% off sale. It's the biggest discount that we do all year long. And there you go. If you click that link, you'll be directed to speak directly to a member of our support team. I'll show you what that looks like. So when you click that link, just click Start Chat and just do the 45% off Black Friday deals, and we'll get you hooked up with our biggest discount of the year. And like it says, chat with our team. Oh, that's a typo. Chat without team. Chat with our team, and it's not a robot. It's real people on our support team that can help you out to get a copy of the tool. How much is that? We do offer payment plans, things like that. Send us a direct message. We'll give you all the information about our software. Someone says marketing. Absolutely, it is marketing. Are you kidding me? We build some pretty cool data, and it's all browser-based. It's one-time payment. It absolutely is marketing. If you're interested, send us a DM. We'll get you hooked up with the tools that we're using. The FedWatch tool didn't really move too much after that. Still at 60.40. So we'll call it good there. I think I'm going to need to wrap up the stream, guys. I've got a podcast that I have to jump off to now. If you enjoyed today's show, do me a big favor, hit the thumbs up button. I hate to leave it. We still got 1,200 people watching. So thank you guys for hanging out with me, but I got to run. Before we break it down, like I said, get 45% off the Edge Finder before that sale ends. It is only a few days away from ending, or Black Friday sale is the biggest discount of the entire year. If you're new, we had a lot of people join that are new today. If you want more information about the Edge Finder, send us a direct message. We do have a free Edge Finder course that you can just request access to. And it's a full demo tutorial of the software that we're using. If you're curious, if you just want some information, send us a direct message. First link in the description down below or in the live chat right now, and we'll hook you up. Thank you guys really much for hanging out today. We almost did 5 hours of streaming, which is a long time. I was on for about 2.5 of those. We had some great other show hosts that took over during that time. So shout out to everybody. Thanks for hanging out, and have a great rest of your day. See you guys next time.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.